long do we leave these rates? How far into 24, which, remember, the original thought was end of 23, we're lowering rates. Now it's the end of 24. How does that evolve? How does that discussion evolve? That's the next step.
Higher for longer, maybe forever.
Higher for longer, and not ever going back down to zero, where it was without some event.
All right, thanks for looking at the data here, Kev. Appreciate it. Let's talk about some of the action here this morning with Ben Lichtenstein, host of Futures, fresh off his show. Ben, what do you make of the response here so far that we're seeing in markets?
Yeah, Oliver, I think it's a pretty good example of how, really good, or in this instance, great, is not as bad as one would think that it could have been. I mean, we are definitely seeing some movement in markets in reaction to the better than expected number, but we're still holding on to some of the extremes that we saw earlier this week in reaction to the JOLTS number. So I'm reminded of the Treasury chart. You started off looking at the top of the show. You mentioned 86 basis points to the downside in terms of the 10-year. Well, look at the futures contract as far as the indices. The S&P is a very similar chart, right? We're talking about some consolidation into the number. You get that imbalance that's created by the big miss, and in this case, the beat to the upside as far as non-farm payrolls coming in double expectations. And then you can see here, though, look at where we are at 42.42. We, for one, have yet to accelerate and continue that move lower, but also I want to point to, as we take a step back, look, we're still holding up above lows from earlier this week, 42.35. So again, you were talking about how, today we have potential to see the bulls fight their way back with that wages component, the strong number, coming in and setting us or putting us a bit on our heels, but the wages component not necessarily accelerating things to the downside, and I think it has us taking a step back and realizing that, hey, strong jobs is a good thing, especially in a higher rate environment. Also, taking a look at where we are and how we've just been consolidating near the lows from last month, Oliver. Taking a look here, we're right on the 200-day moving average, so this is a key area of support. Not only do we have the fundamentals that have been playing this week, but also some technicals that have been going on. You've got the S&Ps, you've got the NASDAQ holding above that longer dated, while we've seen small caps and large caps take out the 200-day moving average. So yeah, definitely watching this. And then again, I just want to remind everybody that after the strong number today, I think it's important to remember that it's not the only factor at play, right? We've seen rates on the move higher. Look, there's your longer term look at Treasury yields, which have just been tanking and accelerating to the downside now in this vertical phase. And then you've got the 10-year on the right, you've got the 30-year on the left here, Oliver. Obviously the flip side of that coin and the big move we've seen in yields. In addition to that, just want to also point to, again, another product to keep an eye on, which crude oil has been a factor this week off the highs from last week. We're talking 95 down to 81. And again, just here it is on the bigger picture. It failed around that key area of resistance from last fall up around 95. So there's a lot going on here this morning, Oliver. A very busy week. I just want to kind of broaden the focus here away from just the big beat in terms of the jobs report into the week that was, and how, considering everything, I think markets are hanging in there pretty well so far heading into the cash open here this morning.
Yeah, agreed. The fact that we got the move down in crude helped provide some relief on that inflation front. Bonds have been calming the last couple days, and it wasn't because we had bad data. You know, the ADP suggested that this number was not going to be as strong as it is, so another smack in the face to anyone who tries to trade off that figure. But we also got the ISM services that was above 50, expansionary, solid, but bonds were firm and the dollar slipped anyway. So there is a recent display, the last two sessions coming into this, of the market's ability to kind of keep a cool head around solid data. It's just going to be whether or not this goes outside of the description of solid and into like framework breaking, because I just don't think anybody had anything like this in their playbook. And so if nobody has 300,000 jobs at this point in their playbook, it probably means they don't have the move in rates or the dollar in their playbook that would be appropriate, I would think. But to your point, NASDAQ hasn't broken down quite yet. So that really is the one we got to hope for here if you're bullish.
My thought, Oliver, is into next week, keep an eye on the 2-year. You pointed to the fact that we haven't really seen acceleration there.
Yes, that too.
If we start to see that come into play, that could accelerate the dollar to the upside and could add to some of the weakness we've seen is we've now, again, I pointed to come back down to the 200-day moving average in the S&Ps.
Sure, good point. Yeah, definitely going to watch that too, because if that starts moving, then suddenly maybe not just higher for longer, but higher, and then maybe for longer. Okay, thanks, Ben. Appreciate the look at the charts. Good context here for the big picture on the week. When we come back, we'll talk some more about the state of the labor market and prepare for a session that so far is a two-way trade. We had the first knee-jerk sell-off, but there are some buyers of that dip as the Nasdaq's up off the lows, and bonds too also caught a little bit of a bid. We're now down 0.7% in the 10-year future. That is still a big sell-off in the Treasury market.
I remember when I first started flying.
Good morning. It's October 6th. We are going to be streaming the stock market, streaming stocks, options, futures trading. Sub up, like up, comment down. Happy money sticks around. We'll be watching the SPY. Watching GME, AMC, Dish, Rad, whatever you guys have. Happy you guys are here this morning. Hope you had a good rest of your evening yesterday. You guys were legends yesterday. The dono train. So generous. Yeah. Had a sell-off this morning. Jobs data came in. Jobs are strong. That's my take. Let me look at the actual numbers here. Still not below our channel though. So I think we could still have a proper dead cat bounce. This is a actually sick bounce before open even. We're down 1%. It's almost 0.5% bounce before open. Unless we break out of this channel, I think we'll probably we're still in it. But typically this would be bullish with the RSI divergence that's going on, and sitting at the bottom of the Bollinger Band and stuff on the daily. And below a lot of the moving averages. But that said, this could be the catalyst. We could break. This is our 200-day moving average right here. So potentially we test that bounce before going up. Maybe we'll hit that first. So let's see, average weekly hours, average hourly earnings month over month, lots of stuff. So average hourly earnings month over month, actual was 0.2%, forecast was 0.3, average hourly earnings year over year was 4.2, forecast was 4.3, average weekly hours was 33.4, that's what the forecast was. Manufacturing payrolls was 17,000, forecast was 5. That was pretty far off the estimates. Non-farm payrolls, this was the big one. Actual was 336,000. Forecast was 170,000. Private non-farm payrolls was 263,000. Forecast was 160,000. Unemployment rate was 3.8%, forecast was 3.7. So when the information comes and it's far off expectations, that's when you get the reaction. No matter which way it goes. All right, I am in Discord on the YouTube stream. If you guys want to come chat, welcome. Got 6 minutes to the bell. Our pre-market thumbs uppers doing. Only 2 of you, but I appreciate it. Interesting when there's more than 2 of you even chatting. Morning, Bubblicious. Market order puts it open with whole account in tropical Celsius. Really? What's up, Chili Chills? Every 100% I'll go to, I'll donate 100. This is the way. All right, man. I guess a good hedge for me then would to just inverse you. Does that make sense? I think so. Good morning, Bubba. Good morning, Chili. Morning, GDM. And GME shorts have been borrowed each day for the last 2 days. I don't know why. How do they know it's been borrowed? Our data is very limited and skewed on that kind of stuff. There's hard to know what's actually been borrowed. What we do have is still skewed in a lot of ways, but what I look at least is the borrow fee. I remember where that. The name of that site? I forgot. I remember. Look at that bounce. That is also on the support from earlier this week. Around there, something borrowed. Less available. It's not that straightforward, that simple. Unfortunately. For one, it's self-reported, as you know. They don't have to report. Could be, I mean, yeah. I just don't trust it. As straightforward as that, at least. Rebounds. We'll see. We will see. Very well could still retest these lows, yes. I don't hold pre-market with a whole lot. 5% day today, wow. Calling for today being the crash. Well, that'll be exciting. Day. Or sorry, 4 minutes to open. Too much on the pre-market. Guts. Thanks, guys. Appreciate your likes. We're at 5 now. 3 minutes to go. Whole count puts 30% stop loss. Yeah, I saw you write that this morning, so you're stoked because you've had a proper bounce since then. A way better entry for puts. It opens up here. sound. So strange how I'll get certain notification sounds. I have no idea what it's from. Like something I never use on my phone, and then all of a sudden I woke something up and my phone's making new noises. Someone hears it. Whose phone is that? Oh, it's mine? Someone from another planet's trying to call me. They use their other planetary ring. Okay, patience on the menu again today. Hope you're back good gains from this week for Friday. Lock it in. Better lock it up. Lock it up. Patience. Minute. Jones up 3%. Jolene. No. Any Dolly Parton fans? Beachbody. Let's see, where do we go? Here we go! Finger pumping. I have not liked Finger's chart. I think it's been just a mess. Mess of big range, consolidation, accumulation, distribution, something. Bubba's in his putts. And we're off. We are off. Got Party City up. The first OPEX of October is upon us. Happy Friday, everyone. Be patient. Market's not going anywhere. We'll be here on Monday. Will your money? Everyone's down. Brad's down 5%. Got those leaps. Beyond is down 2%. Rum at 1.17. AMC above that wedge. I like it. See if we can get above 850. Up 1.2%. Run is down to 1. SPY moving up a little bit. Got pre-market high right here. See if it rejects. There's a new high, just broke pre-market's high. Four 422s. Job, Bob. At least you get him at the money, man. Appreciate that. Art. Fewer contracts. Higher probability. This is the way. Go, little double doji candle there on the 1 minute. GME is slightly green. AMC 3.5%. Do it. Bob 850 again. High. Three and a quarter. Shared an article on Discord about the Taylor Swift, the money they're expecting for that. I think they had 100 million in ticket sales, like pre-sales, for that Taylor Swift movie, which is best on record, I believe, ever. So we'll see. I mean, AMC could use a few billion for sure. I broke that little channel. See, little inverse cup. There's 4% on AMC. Oh, we're hitting that 910. Doing it. GME's consolidating down here. 1472. % on AMC. Didn't make the full inverse cup. AMC getting close to yesterday's high. There it is. There's SPY retesting the low of the day. There's new low on the day for SPY. Fingers up 5.3. AMC still up 3.5. Hold above that 850. Oh, it. I might want that 200 day. Bubba, you still full port? Taking your profits? High bounce in there. See if we get the same little bear flag set up. Bouncing back up to VWAP. AMC just below 850. Right around 850 there. GME's barely green, 0.20. M-Game's up 9.4. Any stocks are up right now. Other little head and shoulders here. Get out the bottom of this. SPY breaking up through VWAP there. Get calls on that break. Give it time. Where we go. Well, inverse head and shoulders. Break of that downward channel though, it's not bad. See if we retest the high of the day again. These scalps will trap you. Overstock's up 3.6. That is neat. Have his inverse head and shoulders. Not ready to pull the trigger on calls when we broke that channel. Good. Gins. 15 minutes. We go AMC up 4.5. Above 850, 867. Market keep building liquidity. Go wit. I'll grab puts. We break here now. Get a little more understanding. Tiger's up 8% now. Goes. I be breaking this channel. Yeah. Let's see. Yep. I'll be patient. Give it time. See if we find support on the bottom of this channel. AMC back below 850. Pretty choppy this morning so far. I think it's in a downward channel. So at this point, break on this side would be bullish. That liquidity channel was right. Beyond is breaking through that support. GME's flat, Teladoc's down 1.6, loans up 0.5%. Didn't realize Dish actually had a pretty good bounce yesterday, like 4%. Also an engulfing candle there. It's down 0.5% today. Space down 1.8. Run down 3.75. Run down 4%, kind of flushing through the lows there. Might come down also. Could have gotten puts on this break, but I'm gonna keep waiting. AMC below 850. Still up 1.5. Fine, new low of the day there. Overstock's up almost 6. Stock's rallying. Rallying off those lows. MC only up 0.5. Above the wedge, below 850. Might be a double bottom here on SPY. Kind of chopping on down though. G's up again, huh? Oh, getting that gas. Trying to break out of that accumulation, huh? We'll see there. We'll see about that nat gas. I have to dust off the futures account. Overstock 6.5%. Insider Marcus Lemon. Lemonis? Snaps up some shares. Marcus Lemons. 33,000 shares at 15 bucks and $500,000. Immediately his investment's up 6%. Well done, Insider Marcus Lemons. Upgrade to a buy rating. That ain't bad.
Right now, stocks are still red, and bonds are still red, and the dollar's still green, but we haven't moved much since the first response to employment. So it's a little calm, actually, here on this Friday.
Home for now. Might be starting to taper here. See, I think we could just be chopping around still in this channel. Also, I know he can get the job, but can he do the job? I'm not arguing that with you. We work down 2.5. Pretty awful. Let's see, Palantir, Planter, Platter, Recorder. Air test systems. I guess Weeble doesn't know either. Air Test Systems is a provider of test solutions for testing, burning in, and stabilizing semiconductor devices in wafer level, singulated die and package part form. Quite the move. Is that an AI pump? Four hops. Went from $1 to $54. I guess that is 2 years. Crazy. $6 to 54 in 1 year. Okay. Rivian down 2.7. That was a lot of selling volume yesterday on Rivian. I read those puts. I hope you closed. That's a nice move. Nirvana's down 1. Yes, broke that support. Firm's down 2.5. Soulfly flat. Tesla down 3. Axis down 1.8. What is this and why is the put premium so high? Tell me why. Sketchy bank. Say no more. Oxy's up 1%. Oil doing down 0.5%. Oh yeah, oil actually has sold off quite a bit from that high. Very well could be demand destruction coming in. Remember like 2007, 2008, oil was so expensive. You had the crash. Like 2009, was it? Started to get so cheap. Talking about fuel prices. Where you noticed at the pump. Remember it was that was the cheapest I'd seen it since I was like a kid. Was it under $1 some places? I think it was. I think it was $1. No, maybe not. I don't know. I think it might have been like with certain deals, like maybe Costco gas or something. I feel like I remember paying less than $1. Apple on the put. Greener. They have earnings or something? Must be earnings. Got Canyon. Amazon's on here. Range. Must be earnings. Intel. Shoulders. Wow. AMC is now red. Why is so jumpy? Guts, did you have the Rivian puts? Did you sell those? Stop. Oh, that's right. You had him a couple weeks ago. Remember who it was that had him? Maybe it was or someone got weeklies on it. BRCC down 4.4. Market caps are being sucked. Their value. Buy new low on the day. Wow, Walmart's sold off. What is this? The jobs report? Ugly. Must be. Dow drops nearly 200 points on losses in Walmart Verizon shares. Yeah, Walmart's down 4%. Costco's also down 4%. Liner puts from the top. Nice, guys. Well done, man. You somehow are able to squeak out profits even if you're trading the wrong direction. Pretty impressive. See that Weeble notification that was yesterday on this bounce. Mr. Profit Squeaker. And for the long on what? AMC? Liner? Spy? Palantir? Have been selling off more? A little bit, yeah, down 3-3. Got a nice gap there. My options up at all? Too far out of the money. Too far. Horizon's way down there. Eyes waking up a little bit. Be starting to taper down here now. Let's see. Pretty choppy day so far. BlackBerry's still selling. I think this is maybe selling off. Not sure, but I shared an article on Discord. They're doing like a spin-off, I think. Yeah, on plans to split. They're splitting their business into two different businesses, so I think that's why it's selling off. Jones up 6. Overstock's got 6 1/4 on it.
Is because this trend continues.
Yeah, you would think. I mean, they could basically charge anything they want now if they can promise security. Wall Street Journal's Clorox report yesterday
back up to
said
VWAP
so far
here.
they spent $25 million. So, I mean, this hit, and who knows what some of the other ramifications.
Break the top of
might
that
be
channel,
for
I'll be getting
Clorox
some
earnings,
calls.
et cetera, but their actual cost of repair, I guess, according to the journal, is so far 25.
Not my favorite place to
MGM
enter
100.
calls.
What a business, these hackers. I mean, look, I guess it's the same as being a bank robber,
I
but
won't.
still, it's like pretty absurd.
Only my
And
favorites
I do think,
today.
to your point, should be some kind of input to our calculus for
I think we do have some tapering.
valuations on the cybersecurity
As seen here,
companies.
though.
I mean, it's crazy stuff. You can shut
Look for
down
calls in the
entire
bottom of this
hotel
channel if we get a
chain,
retest.
for a couple days.
They're down here
steal
or down
people's
here.
info, get $100 million. That's nuts.
That's nuts.
Yeah, definitely.
That's a lot of nuts.
We are going to notify the customers that were impacted. Mostly it was
You guys know that?
names, phone numbers, and potentially some addresses. A couple of customers, they did not say the amount, but they also
I
had
hope I'm
some
not in it.
customers that did have their
I was at the MGM last time I
social
went.
security. And
That's a lot of nuts!
You guys ever see Kung Pao?
That's a lot of nuts!
You add some additional comps out there and get people to stay at the casinos more, they might be able to make up that 100 million. You know,
This morning.
Okay. All right, thanks, KG.
Oh, this
Appreciate
morning
it.
you bought puts?
MGM, a bright spot, a down
Oh my
market
gosh.
today.
Works every
Interestingly enough,
time,
after disclosing
50% of the
$100 million
time.
hack. Let's
Like a
trade on
charm.
Dan Deming, managing partner at KKM Financial.
That's a
What
lot
do
of
you think, Dan?
nuts.
Kind of a weird winner on the day.
Yeah, it is a weird winner, Oliver. But nonetheless, yeah, you know, the initial numbers probably not as bad as what was anticipated. And as Kevin pointed out, you know, it's still yet to be determined if that's going to be the ultimate, you know, result of the situation or if there's going to be further damage to the bottom line. But overall, it seems like the market's taking this in pretty good fashion as far as the ability to hang in there today on this pretty heavy selling pressure so far today. But I think, you know, when you look at the general trends in the stock, you know, Oliver, where it came from just in the middle of July, I mean, it's down substantially. It's actually just, it's still up on the year, but not nearly as much as it was.
Yeah, sharp days of
When
red.
you look at this 35 level, there is some pretty decent support between 32 and 35. And I think moving into the end of the year, if we continue to see some positive steps in reaction to the attack, coupled with the potential for some recovery in the market before we close out the year, that MGM should benefit.
All right. So at this point, breaking down from the trend and putting this hack behind them, potentially the market telling us this morning creates an opportunity if you believe that these stocks still have potential to continue normalizing their business models post-COVID. I mean, maybe not a bad entry point.
Right. No, I mean, much better entry point than it was any time in the last couple of months. That's for sure. Yeah, I think that, you know, one thing here, when I looked at a trade example today, Oliver, define risk, you know, there was some thought about the potential of selling a downside put or something like that, but the jury's still out. I mean, it seems like an initial reaction is positive to a very, you know, negative situation, but overall, I think the key here, as far as looking for a trade example in this name, is defined risk. So what I looked at is a little longer dated call spread, December call spread, and buying the at-the-money call, the 35 strike in December, and then selling the 42 call, which is $7 above. You can do that for about $2.20 here. So it gives you, again, a nice capture range to the upside, but allows you to define your risk to the downside.
Okay. All right,
9% on Overstock.
35-42 call spread, buying the dip basically on MGM.
Right. Yeah, exactly. Instead of just buying the
GNS
stock
popping
outright,
up.
and you know, you're paying a little bit of
Congratulations, Ace.
value here,
6.5%
which is
on
part of that
GNS.
part of the deal when you get into the options market.
Nice little play out. Reverse head and shoulders.
Upside
Point out,
capture
look at the
down
top
the
of this
road,
resistance
but
we
I
drew
like the
here.
idea of defined risk here, just in case there's further damage as far as the
Above it
numbers
so
that
far.
continue to unfold, and you know, just the precarious kind of position we are in as far as market structure. You know, we still believe that we're going to see some further upside once all these things kind of stabilize. And now, especially with the 10-year getting up to where you would think that it's going
GNS is up
to
7.25.
top out, because if the Fed does maintain the
Your
yield
position too busy, B?
5.25 or so, that you know, we're not too far away from that now when you look at the longer dated treasuries. So
Look
I
for
think
like
that
$1
once that
for some
kind of gets
profits.
sorted out in the market,
Around there,
that,
98
you know, we'll
cents.
see some further upside. And if that's the case, then you would think MGM would participate as well.
Okay. Bullish trade on kind of a bearish day, but we're hanging in there. To your point, Dan, this isn't too bad considering the way it looked like we were going to go this morning. Quick thought here on how the rest of the market's faring?
Yeah, sure. I think that overall, I mean, we're hanging in there. You know, we're down, 28 handles right now, well off the lows that we did see in reaction to the release. You know, one thing in there, a couple of things. You know, the hourly wages was downticked, 1% or 0.1%. So, I mean, other than the headline number, everything else appeared, at least to me, to be relatively in line. And I think that that's maybe the caveat here as to why we're seeing some buying. Also, major support here below on the S&P. So, again, that's a key level.
Thanks,
42, let's call it 42,
yeah, it's a nice nice one for
so,
trading.
You know,
I like what these CEOs doing.
All right. Thanks, Dan. Nice chat.
All right, Albert.
Nice trade.
Thanks.
Looking for some upside in MGM through the call spread. Dan Deming, managing partner at KKM Financial. One thing's for sure, though, is that the Fed won't be cutting anytime soon. It is indeed higher for longer. Now we just see how stocks respond to it. Let's continue to try and figure out what that means for our portfolio. Maybe a little cyclical preference, perhaps, if the employment situation is going to be this strong. The economy can't be too bad.
Got to add to your favorite. You added to Mullen? Been hanging out on our Discord too long. Talking to JH. I mean, Bed Bath & Beyond was like a stretch. Mullen, though? I mean, you know Mullen's my top 5. Easy. 8.3 on GNS. Nine and a half on GNS. Do it. Alright, let's see if we respect this channel, if we break through and we're still in that same downtrend. Could have puts on the top, but it's not my favorite, just trying to scalp in the channel, especially when it's somewhat choppy. Like a channel break. There you go. 98 cents, there it is. 10%, 10.5 on GNS. Do it. After $1. $1. Seems logical. We're just top of that channel. Buy rallying a little bit there. Nice bounce right on that support level. Not even from. Yeah, I got the calls. I got the calls. Don't like it on the breakout. Like it on the retest if it's a breakout. Probably average into these things. It doesn't keep rallying. 98 cents on GNS. First trade of the day. Wait almost an hour. That's good. What's up, Maui? Morning. DRS 50,000 shares from TDAST. No problem going through. Oh, on barbecue? Nice. Well done, man. Look for profits high of the day for this cup completion. Or will I? Yeah, I will. So it broke out of this channel also, which is a good sign. We did. This was the first sign of it, was that tapering. Rejected there. I mean, grabbing it here would have been... Yeah, could have grabbed a little sooner, I guess, but... Whatever. have this little inverse head and shoulders down here. Eventually set it up. That's awesome. I thought AST like dropped him or whatever. Did they move to a different one? GME is flat. GNS hit literally right at that 98 cents. I want to hold these. Close one. We need to make high of the day or this is still bearish. There you go. There you go. Let's see. Okay, that's adequate. Give you a little handle. Entry request is accepted. Oh, well, if it does move, I'm sure AST will take care of it.
Anytime soon. There's a little bit of a floor there that we expect to stay in that $75 to $85 range for an extended period of time. Times 100% capacity running at Conoco, we feel like that's just a great way to keep churning out a lot of cash, a lot of revenue that they can do different things with. Same thing with Caterpillar. Yes, the higher cost of diesel makes it a little bit more difficult to operate heavy equipment. That's not necessarily Caterpillar's burden at this point in time. The work is still going to have to get done. The projects are already there. They're finally getting permitted, and we're going to start to see, you know, shovels in the ground here pretty soon. And so again, it's a way to kind of avoid that higher commodity cost and still get involved in the market at this point in time.
And not worried about China's growth potential as it pertains to Caterpillar?
At this moment, there's just so much opportunity here domestically
in
the
GNS.
short term. That definitely is a longer-term
Investing
issue that Caterpillar is going to need to address in terms of where heavy equipment gets sold outside of the United States. But again, with about a 3-year backlog in orders right now, in the near term, at this valuation and the type of earnings that they're generating,
Look to reload with some
it's
calls.
an attractive story.
All right.
Get a handle here.
Great convo, Brian. Thanks a lot for the specifics here, taking it from the macro all the way down into the companies. Our favorite thing to do, so very helpful. Good stuff.
Thank you so much.
Brian Mulberry. client portfolio manager, Zach's investment management. Coming up, charts, 3 of them, all connected to payments. Guess what? This market's coming back. NASDAQ trying to go positive here. We're within 16, 14 basis points. It's going, baby.
It's going, baby.
Down to just a 20 basis point jump, and
doing it.
10-year yield having trouble moving too far beyond 4.8. Equities are really efforting a rally here. We'll take a look at the consumer through the lens of Discover, PayPal, and Block up next.
There it goes. Look at that. Didn't even need the handle. Brief consolidation. The laughs. GNS hitting $1. And GME up 0.5%. See climbing back up to VWAP. Ripping there. Going down 0.28% now. Kind of trend we're in. Excuse me. Nice. AMC up to 2.65, up above 850 again. Once more above VWAP. Big range on that thing. GME's waking up a little bit. Up 0.8. GNS 16.25 Ace, wake up. Sell some. Make some profits. I think GME's flat to small bounce. Up to some resistance from its pretty big sell-off. Yeah, I was seeing that about barbecue that people sent to other transfer companies. Almost no one to bet. He's back in it. Thought I got out. I mean, I'm looking more like a longer term swing. So intraday and by the hour, I'm not. I don't know. It's fickle, dude. The thing jumps around. Whew. Quick, draw some lines. He stuck his intuition last time, which served him well. Do that again. Holding above 850 is bullish for sure. I'd say 910. 910 over our next target. Yeah, it's looking good. Sorry, busy. Yeah, I don't have a whole lot of intraday, but it broke out of the wedge, what, 2 days ago? Or yeah, 2 days ago. It resistance 850. Then yesterday it stayed all above the wedge, which was bullish. Broke out of it. Closed back below it. I should sell another call here. Wait a minute. Oh, I gotta leave runners, okay. I'm gonna get more though. But yeah, now today it's back above that 850s of contention there. It holds above there, then yeah, I think you're good for at least 9-1. Even if it comes back below, it follows the support line up. Still looking good. But yeah, I mean, this thing, it could have a pretty big day any day.
right here. That was a big trading area. But the price action, pretty rough, you know, any way you slice it here. But oddly enough, this is probably our best of the 3 charts we're looking at today. And I think that it's important to kind of dive into what happened. Here was earnings. First of all, we had a 16% one-day drop. Then we had a 1-2 punch here of the CEO departing, and that resulted in a 9% one-day drop. So really tough price action here for anyone bullish in this name. And we can see here that more recently, the price action has been encompassed by this downward channel type shape here. 2 parallel lines, one going across the highs, one going across the lows. We had a little bit of a breakout to the upside here. Ultimately, it did not play out though, because we were treated back below our 21-day EMA and back into the boundaries of that channel here. A little bit of bullish divergence. Here you can see that price was making lows while RSI was actually trending upward here, complicated by the fact that RSI was actually in the oversold area at the same time here. So kind of a mixed signal there. I certainly would be a little hesitant to make some big bullish play based on a little bit of bullish divergence when the price is seems so strongly biased toward the downside right now. We're below all our moving averages. The moving averages are trending downward. They're diverging farther apart from each other. It's a kind of a rough story here. But to look for support and resistance, I put in our standard deviation channel study. We draw our blue linear regression line. We take standard deviations above and below price. -2 channel would be the next point to watch. Comes in near 81 to the downside if we keep falling here. So that would be another fairly significant drop here. But, you know, the point to watch to the upside here, the point to really break out in the near term, confluence of the 21 EMA and the trend line near 88.50. And then the top here, where we form this gap near 95.30, that's really the ultimate hurdle to clear before we can resume some kind of uptrend, really.
Does seem like the risk reward still very much in favor of the bears, given the persistence of this channel. The upside hope's pretty limited to get a real meaningful move, whereas the downside, if it continues, is kind of already laid out there for you, at very least the bottom of the range, if not that standard deviation, which takes it back down to 80 bucks. So we've got earnings coming up, though, shortly here for Discover. Let's talk PayPal, which is in the neutral camp, I guess, from this analyst, basically. Jenny, not quite as positive as what was that, a positive catalyst to watch on
90-day positive catalyst watch,
90-day positive catalyst watch. Okay, what about for PayPal?
I have to say that the story just gets more negative here on out with our next 2 stocks because, well, we did see, I mean, the market perform rating, $66 price target they assigned, which is well below the average among analysts, which is $85 a share. So 85 actually pretty optimistic. I guess it depends on how you want to frame it. Perhaps 85 is maybe too optimistic, given the fact that we're seeing shares trade, I mean, well below there. But
so even though they've got a neutral, their price target is way below where most analysts think it should be, but also more realistic.
Right. I mean, much closer to where we're currently trading, just below $57 a share. So, I mean, they did say that, well, PayPal is this leading fintech player with unmatched global networks, along with leading consumer and merchant products. I always think Venmo, because that is something that's basically used as a verb at this point. They do see ample uncertainty given their assertion that staying on top is just as hard as getting there, saying that there may be many potential catalysts, but those rely on these show me dynamics that are apt to limit meaningful upside now in the near term. So they just don't really see anything compelling, I believe, in PayPal shares. And it's amazing to me that of the 43 analysts covering this name, 63% do have a buy or buy equal rating. So they are in somewhat of a minority. I mean, I would say it's pretty much a divide right now between basically the holds and the buys. The average price target, though, among analysts is $126 a share.
Jeez.
So that also then skews the mean, obviously. I mean, that's then making that average price target 85.
Wow. Okay, 85 bucks
is the average among analysts.
Okay, all right. So that's still pretty high, not quite as insane as 100 plus, but okay. Lower lows on the chart, lower highs, also new CEO too. Rick, this chart has been struggling, and a fresh new low today.
I wouldn't hold my breath waiting for 85 on this chart. You know, the way you guys were talking about all that stuff made me kind of scratch my head here, because we're making fresh new yearly lows on the day. We broke through a supportive level near 57 here. This red dashed line represented some old lows that we established here in recent weeks and months here. Trend lines, I think that there are 2 choices you could make here. One, you could do it with the pre-earnings highs beginning there, trending downward, a more steep trend line. Another you could do with the move after earnings, so a much more shallow trend line. Either way you slice it, they're both down though. The moving averages are trending down.
Hanging out up here.
All of them, they're diverging apart. Same
Lagging.
refrain you're going to hear me say over and over through this segment because it's kind of the same situation for all of them, unfortunately, for anyone bullish in this name here. But you can see, nevertheless, we didn't have a huge breakdown below this support level here. It's looking like we're stabilizing a little bit here. RSI showing a little bit of bullish divergence once again here. And I really would caution people. RSI
yeah, Ace,
is,
well done, dude.
Kind of the tail, the price action.
I'd be
the
taking
dog,
some profits
you know
here on
what I mean?
GNS,
The
so
dog is more important than the tail wagging here, so to speak. So
$1.
keep the price action in mind first. We're
You leave
making
some, but
new lows.
I would be taking some.
All
I
our
was in it.
relevant moving averages here. A little bit of bullish divergence doesn't really sell me on upside right at this second here. Once again, standard deviation channels to take a look at here to help us extrapolate where we might find some support based on our study here. We can see that relative to our recent price action here, we've got our -1 channel coming in near 52. So that could be a potential stopping point here. To the upside, we've got a nice little confluence of resistance though. We've got our yearly linear regression line, our line of best fit, our 21-day exponential moving average, and our more steep trend line all coming together near 59.50 to 60 or so. So maybe a 50-cent range that you might be looking for some resistance in that area.
Okay, all right. Pretty well centered onto the downtrend right now. So I do like the standard deviations as kind of a way to think about the possibilities of where this could roam, especially when a lot of our previous hits ended up being around that one standard deviation. Earnings coming up too later on this month. PayPal not looking great. Probably a little worse maybe than Discover, possibly, but it's all up here for debate, I guess. None of these charts are looking good. Block either, Jenny.
No, it's not. And the amazing thing about what the economy of these stocks is, Block is objectively the worst performer. I mean, they're down 32% this year. They're off their all-time highs by 85%. I know they're not at 52-week lows like the way that PayPal is today, but objectively looks the worst, yet analysts like this name the most. So this analyst at TD Cowen, same one as PayPal, actually initiated an outperform rating, $59 price target, which is a little bit more coming down to earth than what they have on PayPal here. But they did note that Block boasts this fundamentally differentiated ecosystem in fintech, given its Cash App and Square ecosystems, and they see actually the company's ability to grow and integrate its solutions, placing it actually among those most likely to challenge the industry norms, saying that shares with the selling pressure, it's been overdone. Negative revisions have already played out. This name has, though, 68% of analysts have a buy rating, which to me is wild. So that is the most buy skewing of all of these names we've seen.
Wow.
Yet the fact that this name is down 32% on the year. I mean, it's so I guess perhaps analysts see some opportunity in shares, but it has been a slow burn to the downside.
You tell them,
especially when you
Ace.
zoom out and you look at all-time highs at around, I mean, $310 a
You
share,
tell 'em.
$289 a share was their all-time high.
Stubborn analysts in these
Right.
companies, for sure. And then also, though, you know, the charts getting shredded kind of makes them look a little outdated.
Shredded.
But then you get a big employment print, and it's like, all right, that should be good generally for people swiping, point of sale that Block sells. But there's also the other components, kind of its online banking attempts have kind of sputtered a little bit. So there might need to be a come-to-earth moment for these very bullish analysts generally. I mean, Rick, what do we got going on here? This is like a funnel or what?
I guess I would just call it a very steep falling wedge type shape here.
Okay.
You know, like we said, this is probably the worst of our three charts here. I think you could argue that pretty
Jasper has been getting
this is the
wrecked.
one performing the worst here. But it's also got perhaps the most positive little green shoots here. We are having a little bit of a breakout from our wedge shape here to the, you know, our breaking upward beyond our upside trend line there. So, I mean, is it something that you should make some huge trade based on? No, probably not. But it's showing a little bit of positivity here. We did see a little bit of stability in the RSI. We did not make big new lows as price was trending downward here. But RSI is still very oversold below that threshold of 30 here. So, you know, pretty tough situation any way you slice it
This is
here.
like literally a falling knife. It looks like a falling knife.
Yeah, and that's what they say. You shouldn't try to catch them.
Sure.
You know, but I don't know. I mean, it would be a difficult situation for anyone bullish in this name. But I do think that one other piece of evidence here is that we halted near our -2 channel. So we did find some support at this level where we used to project the lows. We are getting a little bit of a bounce here. So maybe, oddly enough, even though this is the worst chart, it's got the most source of positivity here. If we do keep trending
GME's
upward
green,
here,
21%.
21-day EMA comes in near 47.
AMC up
We've
above
got a little
850.
bit of a volume
Just
node
like that.
to work through as well near the
3.6%.
44 level here.
Nice
These are
volume
always
this morning,
fun
too.
ones when you've got these extreme descending wedges, because the idea of this is that it's been falling at such a rate that it's hard to really fall any faster. The wedge getting thinner and thinner, meaning that like it's almost like you're, you've got the clear direction, but if there is a bounce, it could have a lot of reversion. But it's also, it's not based in really anything. It's just kind of just trying to bet that what's happened a bunch in the past is going to suddenly change. It's like walking up to a roulette table and you see there's been a bunch of red and you're like, oh, okay, black then, but it obviously doesn't make a difference.
Yeah, one thing, it's got nothing to do with what's going to happen in the future.
Happened.
Yeah,
exactly.
But I mean, there can be ferocious rallies during downward moves. So you never know,
Well, it's trying to bounce back with the rest of the market today. Square now up 0.75%. Block, rather, I should say. Thanks, Richard. Thanks, Jenny. When we come back, got another update. As Caroline Woods tells us about another note out there from Wall Street. Stocks are positive in the NASDAQ. Big comeback here this morning.
Nice move on GNS today. 15%. Volume, solid. It happened so fast, the bounce on that support, 72 cents. It's all the way up here to make that right shoulder. Beautiful. Today it broke that longer downtrend resistance channel. Good things. AMC 4.25.
Over 6 or around 7%. So up and down as this stock continues to sort of figure things out here. You mentioned the Vegas Formula One Las Vegas Grand Prix spending concerns are really starting to pile up on that front. The stock, or the company rather, initially kind of guided for $270 million in terms of capex associated with that Grand Prix in Las Vegas. It's now swelled to an outlook of about $400 million. So that's sort of the negative that's been clouding this stock. On the other side, there's been chatter around a potential Apple deal for the media rights, and the number thrown around in that I've heard as much as $2 billion. So that's the good when it comes to kind of global media and TV rights. The Las Vegas Grand Prix spending has started to swell, as I said. The idea behind actually doing this, because this is super disruptive to the Strip in Las Vegas. I don't know if you've seen the build out start to come up, but you can't even get to the Bellagio fountain. I know some of the locals, just from what I've seen on social media, not super happy about it. The hope is that event taking place in Vegas will grow the U.S. interest in this sport. We'll see if that's ultimately the case or not, but they're able to sign the dotted line for a $2 billion deal or something thereabouts with Apple or someone else on TV globally. I think they'd be happy with that too. This is also interesting, as I think tangentially to this, it kind of shows what Apple's sports media plan is with the focus on MLS, post Messi being a part of that league, being a more global focused sport with a global superstar. This being a market that is far more international than it is the U.S. U.S. rights only comprising about 3% of the company's revenue. Goes to show that there's a lot of growth opportunity in the U.S., but as we know right now, when it comes to sports, really American football is king here in the U.S.
Yeah, this is also going to be harder to win over Americans when it totally disrupts the cities that it takes place in. I guess, Chicago's race kind of went fairly smooth, but this Las Vegas thing is like a total disaster from everything I've seen. I mean, somebody even lost their life in the construction of it. I mean, it's pretty nuts the way they're totally changing the entire layout of major cities. So, it's got to be worth it. So this is going to be like a huge binary event, it seems like, for this company. Analysts making a call like this is it's pretty bold.
Yeah, they certainly have an opinion on it.
Hanging out up here, 16, 17%.
City is saying the Las Vegas concern is overblown. If you disagree with that, you kind of got to disregard this note altogether.
For 111,
I do tend to agree that
potentially
the media
next,
rights
but
story can be a very positive part of this story.
It's going to force them to pull back.
This is a lot of disruption, a lot of build out. Of course, you talked about some of
Pretty
the
liquid though. Seems
uncertain fallout from this as well, and the kind of sad nature of what's going on. But I look at it as 90 days, 3 months, 6 months, whatever this takes to build out and get ready for a one-day event.
Yeah, true. Okay, that's where the streaming rights and the video content's going to be huge. It's got to perform.
Okay, I'm selling this last call.
For the look here at
Likely
the
a runner
company and the note out.
But
expecting something
I'll
positive.
look to reload potentially. Hello, Head and Shoulders up here.
Joining me from Salt Lake. They don't need Formula One. They got horses hiking and skiing to get their blood pressure up and adrenaline pumping. How about a big comeback in markets here this morning, Scott Durfee? That's got to get Bulls blood running.
New high there on GNS.
Maybe get it started to run.
$1.07 now.
I think that this caught me off guard.
20 and a half.
Frankly, I thought, with the print coming in like it did and so forth, this is doing nothing more than bolstering the case that the Fed has for more higher for longer interest rates. And that hasn't necessarily always been good news for the markets. However, as we've stated recently, there's one thing that the markets consistently crave, and that's consistency, right?
Electrolytes.
And so
everybody knows that.
And no confusion. And
$1.08 on GNS.
Helping with that, there's no doubt. We have, in spite of all this, though, we've seen the yields pulling back, sure, but we've seen the 10-year note peg at 4.877. Now that tops the 2007 high of 4.842. So, we have a lot of things that are still kind of acting as a headwind, but the market today is just, give me consistency, give me clarity, and we'll go to work. And I think that's what we're seeing.
Yeah, the higher for longer definitely is what we are calibrating to. But George, when there's no higher in the near term, maybe this market's okay with the longer part. That being said, we are, so here's the two framings. One is that the odds of a hike by the end
Got head
of
and
the
shoulders
year
up there.
are still
I
below
don't know how far it's going to come
50%,
down, though.
but
I'm not taking any puts.
the odds of a hike have also moved up overnight by about 10%.
Don't have
from
any.
about 30 to 40. So there's that. What do we make of that?
Could come all the way back down at this channel, potentially.
Well, I think we're seeing the adjustment on the federal funds futures markets based upon the report today, which
I'll
if
leave
you
it.
actually look
Leave
at
it
it from
alone.
a job standpoint, was exactly what you want. I mean, if you look at the number of jobs were created, of course, beating the estimates, but wages aren't growing. So you're getting job growth without
30
wages.
minutes to
I mean,
you
what else
close.
do you want? So I think the probabilities have increased based upon the number itself. If you look at long-term rates, they are rising, but they're rising for a good reason. If you actually consider long rates relative to the 2-year rates or even the federal funds rate or 90-day rates, however you want to look at it, those rates have been relatively flat as the 10-year is rising. So the yield curve is actually widening out. It's steepening, but it's not steepening bearishly. It's bullish. And I think that's positive for the economy, and I think that's positive for the markets. I think at the end of the day, as long as the probabilities remain below 50%, I don't think we're going to see another rate hike, which I think is the right policy move, because right now, I think the best outcome for the markets is for rates to stay where they're at. And of course, have the markets really digest the aspects of long rates just moving higher. And I think it's because of good economic conditions versus anything else.
The bull versus bear steepener conversation. We've got the bear steepener, but that just might be the more bullish one for stocks. So it's hard. Got to make sure to keep all our labels intact. It's a good thing to bring up for us, George, because today we are still getting some of that steepening of the curve. And the fact that a 10 percentage point increase to the odds of a hike is not sending the 2-year up faster than 10s. I mean, it feels like this is where bulls really got to show up, Scott, because this is the best higher yield outcome you can get. And so far, stocks haven't liked yields of any form higher, but this is the preferred one.
Yeah, there's no doubt. Yeah, you know, when we see this flight to safety like we have seen, and we see it starting to relax now, not a ton, but relax just a little bit, you're exactly right. Now, you know, what we also need to consider perhaps, though, is maybe economically or fundamentally, our economy's changing. You know, maybe because of the age, the demographics in the labor market right now, as they're moving through like a football moves through a garden hose, you know, at the end of the baby boomers coming to retirement age, etc. You know, maybe that's changing the fundamentals of the economic situation in the country. And, you know, we need to maybe start considering some of that stuff as well.
True. All right. Thanks, guys. Nice ending thoughts to the program here this morning. George Tillis and Scott Durfee. Appreciate it, gentlemen. Nicole Petalides up next from the New York Stock Exchange for Trading 360. Thank you for joining MTL. Quite a session here. Bulls trying to reclaim control of the action. We'll see if it's that way at 2 p.m. Central Time for Market on Close.
So let's see here. Could be setting up a big head and shoulders on the day. I have to wait for a break of this channel though. See what develops. Not gonna wear your hat. AMC 4.5, up 8.67, up 4.5, above our 850. Good volume also. Getting kind of choppy up here.
Currently, so seen as that's a pretty big win for Exxon, who has not made as big of a deal since it merged with Mobil back in 1999. So major moves here. We are seeing Pioneer, as you can see, they're up over 9% on the session. Naturally, as Exxon is the acquiring company, we are acquirer, I should say, they are lower on the session here. JP Morgan did say it's unclear if Wall Street Journal's reports price tag of around $60 billion for Pioneer includes some of the assumption of debt and represents some of the equity portions alone. They think that the stars could be aligning on several fronts, which now makes the deal plausible. So right now, that's sort of the whisperings among analysts is what does the valuation look like? Are we paying? I mean, Roth also said this would be about a 13% premium. So that's what they're considering right now. I mean, but also we know that Exxon has been more flush with cash over the past couple of years than, what has been historical for them. So these companies look relatively healthy, and this is
a little inverse head and shoulders maybe up here in SPY, but I don't like the setup.
All right, the big news
New high.
And then what's going
High there on SPY.
AMC, Taylor Swift.
They left a runner.
Big news, and I'd like to see this. I'm ready to sign up and go see this movie.
Okay.
So I actually am going to see this movie. So I am part of these $100 million in ticket sales as of October 4th. For, of course, this Taylor Swift Eras Tour that's now coming to theaters. This is going to be a pretty major event. The film's expected to be released on October 13th. Tickets became available, though, at the end of August. And AMC said the concert did set a single-day record for ticket sales revenues, also announcing that some of its sub-distribution partners have confirmed more than 8,500 theaters across 100 countries are showing the film. And earlier this week, shout out to Beyonce as well. AMC did announce Beyonce's Renaissance Tour will also be released in theaters starting December 1st. So the fact that Taylor Swift is able to gross $100 million in theater sales is amazing after profiting. I mean, I think that this tour so far has made around $5 billion.
I just kind of broke out a little bit there.
It's just amazing. Swift
GME felt it too.
I
think you could see a bounce, like I said. Sideways or a little bounce up into resistance.
Look, I mean, it's what's going on.
Look for 1540s resistance or somewhere down this trend line.
Because she's dating the Chiefs. And
but that said, also we have an RSI divergence, so that's kind of bullish too.
The Jets, New York Jets
So
tickets went up.
you're waiting for the break of these levels.
A hot commodity. Jenny Horn, thank you so much.
Maybe.
Markets correspondent.
SPY might be about to just short squeeze.
Insights here. Ben Emmons is with us, Senior Portfolio Manager, Head of Fixed Income Macro Strategy, New Edge Wealth. Okay, we both said we couldn't believe the jobs number. When you saw 336,000 this morning, even folks who said maybe upside of 200,000, no one said 336,000. What does this mean? What's the takeaway when you see that? And the revisions of the prior months higher.
Yeah, it looks like that we're just so
I got this
resilient
guy's
with this
voice.
economy. We keep adding jobs. And one takeaway I had from it last month, we had like over 700,000 people coming into the labor force. So more than half of that found immediately a job. So it means that the job market is just hot. And maybe, the leisure component was 96,000, which was above, like double the average from the last number of months. So maybe this is Taylor Swift effect, as in, this leisure boom is not ebbing because of those events like Taylor Swift, as one example. But I do think the broad takeaway is that if we're trying to cool off the labor market with higher rates, then that's not the answer, right? It is in the economy can absorb all these people coming in and they find jobs.
Yeah. So at this point now, what do you think the Fed does?
SPY breaking up out of that channel.
That wages come in and they're lower
Pretty bullish move up here.
than they have been in some time. Jobs are being created, so they don't have to worry about
Nice pickup on calls.
the job market or
Hard to know though. I didn't have those channels in yet. That was steep liquidity grab for the bulls.
For the rate hike immediately jumped up. So I do think the market is right that the Fed will carry out what it intended to do, to bring one more rate hike for this year. And I think that's important because this may be where
10.5% on Overstock.
In their mind, sufficiently restrictive.
GNS almost 20%.
Bostic talked about that the other day, yesterday, daily in an interview. Made that kind of point too. So I think more Fed members are looking at
AMC 6.5.
Restricted by year end. They may sit still for the remainder of next year.
New high, broke yesterday's.
Even though you get a strong job market that continues.
Right, understood. So at this point now,
we're getting some of the stocks waking up here.
The higher rates could be a bad thing, or is it just more of a reset?
I think it's the latter, the reset. You know, obviously, if we were to go to say 8% on Treasury yields and everything else goes another 2-3% above that, that would be probably very constraining on the economy. If anything, really difficult. But I don't think that's likely. I mean, there's some deficits worries out there, which probably are to an extent true. But if you have a good jobs report, they would say, why would you worry about the deficit?
You're high there on
If the
SPY.
economy is strong,
Gotta
it's
leave
not
a
really
runner.
a deficit, it's just an economy that stays resilient. So I think rates higher can stay higher as long as the economy stays strong. If not, then it changes. But then rates should go down too.
Yeah, I know you were watching the ISM manufacturing print. When you see a correlation between that and jobs. Here you have manufacturing construction wage trackers versus the quit rates. I don't know, give us some stats and things that are interesting to you that we can take away from this conversation.
Yeah, I think the ISM number was really important because it went back from out of a contraction into expansion, and not by just a half a point, but by 3 points. So there seems to be a big hiring going on in the manufacturing sector, and I think the takeaway from that is that the Infrastructure Act and the CHIPS Act and the Inflation Reduction Act are all boosting manufacturing activity in the United States. Despite the strikes and despite other challenges, I think that's important because as that chart that you're looking at shows, wages stay quite high in the manufacturing sector. That draws in all these people, and people are not quitting those jobs either. So it's not like that they're dealing with a labor shortage, right? So it's in
SPY is
demand,
squeezing
and they
here.
can fill that demand, but people are coming into the labor force. So that's good for the economy.
What's your advice as portfolio manager? What do you tell folks to do with their money at this point?
So we think that we're having a better risk reward in bonds now, given where rates are currently.
Yeah.
The sensitivity of bonds to rates, it becomes less and less. It's called duration. So we are looking at potentially shifting a bit more into fixed income. Secondly, we do like energy and healthcare and financials has been our core position. It fluctuates because of the movement that you're seeing in energy prices, but I think that's still a good position to be in, given where the economy is. Lastly, we do have some caution on anything that's like high yield and that sort of spread risk, because if rates get high enough, the economy will next year slow down. So I do think those sectors start to underperform. So we're becoming more defensive there.
I see. All right, Ben Emmons, New Edge Wealth. Thank you so much for being here today on a huge, unexpected jobs print on this Friday. Ben Emmons of New Edge. Thank you. Coming up next, the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Tom
Lichtenstein.
For Meta, Aflac, and
Aflac.
Trading 360. We'll be right back.
So I'm looking for this setup again. I can capture it. GNS is on the top of my watch list. Chance Bubba, 99% success rate. 11.25% on Overstock. Nice bounce. Might be starting to taper at the top here. Got a head, we got a shoulder. Take puts on a breakout over here, right shoulder, break the channel. Calls, maybe at the bottom of this channel, if we start to bounce off of it. Little inverse head and shoulders. But if we don't even make it down here, it's pretty bullish. If it stays in this aggressive buying channel.
High conviction to the upside, well-defined trend, but we also have an upper extreme around 330 to looking at a 275 lower extreme. As long as we hold above the middle of the range, it opens up a door for the upper extreme test in line with that trend that we're seeing here. Again, high conviction, sideways consolidation is acceptance of a very much a bull pattern. Now, speaking of a bull pattern, I mean, this one again shows that same staircase type pattern, but look, we're going all the way back to November of last year, talking when the stock was trading around 88. Here you can see recently the run up into the highs from this summer up at 326, and how again, as long as we're balancing and holding above 300, and really the line in the sand of the downside is 266, this is in a very much a bullish pattern, and again, I think very supportive of Tom's narrative in terms of the fundamentals.
Understood. When you think about Meta, what about the other names in the Magnificent Seven, Tom? Do you like other names in the group, or is it Meta really the standout for you?
Well, as of this morning, Meta was the deal. I mean, when the market was down, when I was picking these, Meta was the only one that I really picked up in the context. That being said, however, you're not going to keep, if my analysis is correct, that we're going up to the highs again, you're not going to keep NVIDIA down or Apple down or Microsoft down. You know, Microsoft is a powerhouse, man. I mean, you know, they're going to go too. They're all going to go, because my take is that what has happened to coal this time is really strange. We get a little sell-off and the fear goes up dramatically, and that's what you need for higher markets. You know, most times, you know, if I go back 5 or 10 years, you have to come down like 20, 22, 23%. But we could come down 5% and the fear was extraordinary. So most times when that happens, that's when you're going to get a rally, and that's what we've had happen here.
All right. Then we turn our attention to a completely different sector, and that is Aflac. Why is Aflac jumping out at you, Tom?
Well, Aflac is strong. So all three of these stocks, Copart not as much, but Meta and Aflac, they were strong when this S&P was pulling back. And what has also happened is that any type of insurance stock has been strong in this market. So Aflac, we're trading at 76. The high is only 78. So we'll see what happens with the high. But I think it's going to run for the high. You can put a stop, a couple bucks under where we are right now. The sector itself is really performing. And the sector itself didn't pull back like the S&P pulled back. And that's what you like to see, strength versus weakness versus the broad market. And, listen, just look at the tallest buildings in every city. They're all insurance companies. So the bottom line, when the market goes, insurance companies, know how to make money.
Yeah, understood. We have seen that a lot of folks have been picking insurance companies lately. They seem to be a go-to, particularly in a choppy environment or recessionary environment. Ben, look at the Aflac chart today, please.
Similar pattern, Nicole, a very much well-defined trend environment to the upside. We're talking multiple time frames. I think it's important to begin with the most granular, and then we can work our way into the longer term. Taking a look here, though, you can see the high conviction trade to the upside. We were down around $64 back in the beginning of May, if you remember, rallied all the way up to 78. And you can also see a little bit more sideways consolidation. I don't think that's too discouraging for the bulls. In my opinion, that's really just acceptance of the run-up that we saw again throughout this summer. Talking about this chart going all the way back to, again, end of May, beginning of June. Taking a look at what I wanted to identify in terms of price activity. And, well, for that, we look to the 1 hour candle chart here again, and the high conviction trade to the upside, and the fact that we've been balancing around this $76 level. So that's a significant area. You've got a well-defined upper extreme around 78 and a pretty well-defined lower extreme around 73. Now, in terms of similarly, as far as what we looked at a minute ago, that pattern repeats itself multiple times within this bigger picture sort of high conviction trade to the upside. And most recently, we saw, again, big move to the upside, that sideways consolidation, which occurred around 72, 73. And then look where the test back in the end of August came right back to that key level again. 72, the lower extreme, 73, lower extreme of this range. Now, let's take a step back. I just want to show you real quick in terms of this chart, also a similar pattern. As mentioned, how this up conviction, sideways consolidation, the transition from the vertical to the horizontal phase repeats itself over and over again. Here it is, as I mentioned before, that test of that key level which held. And so this is why personally, I like to position myself with the trend, right? Because you have the reference in terms of the key areas to base whether that working assumption that trends, in this instance, continue into the upside or not. It's really valid. And also, when you look at it, it applies across multiple time frames. And so for that's very important. In this instance, we're looking at a daily candle chart, and we're going all the way back to 2020. But Nicole, you can see this pattern playing out multiple times. Again, 37, 45. Not once along this way up have we retraced and taken out one of the key significant areas that was established on the way up. Currently, the bulls are looking at this bounce around 76. They don't want to see it below 66.
All right, and those are the key levels to watch there, what they don't want to see, Tom, right?
Absolutely. And, as Ben just said, we'll see what happens at these highs. The cool thing is that it had a really slight pullback, which is amazing. I mean, because, this market came down pretty good. So when you get a slight pullback like that, right next to the highs, that says quite a bit. That says that there's no institutions that are selling this at this time, which is a big deal. Because if we get the rally, this thing will blow by that high that's out there.
All right. And last but not least, you're looking at Copart today, CPRT. Why is this one on your radar?
So, this pullback with the market, but this is always a unique stock. I trade this stock a lot. And what you have with this, bottom line, it still wants higher price. You can buy it at this particular price. You put a stop at 42, that high of 47, that's game. They're in a unique situation. Copart, what their formula is that they deal with insurance companies to salvage cars, okay? So it's a $4 billion gross revenue. Now, what they actually do is that they take the cars apart and they sell sell parts also. So it's always been a highly profitable business. And, you know, chart-wise, I think this is set up to go to higher price.
All right. What do you think here at Copart? When you look that high, it was 47.39. Ben, where do you think it's headed and why?
Nicole, I'm seeing a bit of a pattern here in terms of Tom's picks today, and it similarly is what we were talking about in terms of the other two examples, very well-defined trend up on multiple time frames and really feeding into what I look for, these two phases of price development. Direct your attention here to the trend up, sideways consolidation, but also look at the left side of the screen, because I want you to see, first and foremost, when we broke out, we're talking about beginning of February to the upside. What did we do? We stalled out and started to balance around this $34 level, and then you can see the price activity that ensued since. A very similar pattern that continues to play out, one we've identified multiple times, and in this instance, most recently balancing around 44. So you have high conviction throughout February, March, April, May, and then look what's been going on since June. We've got an upper extreme around 47, a lower extreme around 42, and we are comfortably in the middle of that range right now and accepting price activity. I think that's a form of, and really just validating this bullish assumption that we've seen areas of value continue to form at higher and higher levels, and not once have we retraced and taken out one of the key significant areas that were established on the way up, currently balancing again around 44, and the bulls don't want to see this below 41. So let's take a step away from this intermediate time frame chart. We've got the 4-hour candles here, and taking a look at the daily time frame, you're going to see a very similar pattern playing out. Again, we're just talking about the high conviction phase of the upside, the sideways consolidation when the market accepts and then kind of gets overlapping rotational, and then it's just straight up wash, rinse, repeat. I mean, look at this. It's pretty predictable at times, more so easily identifiable than others. In this instance, a pretty good example thereof.
Right, understood. Final thoughts here. Thank you for that, Ben. When you look at that chart, I really appreciate it, Ben. Last but not least, Tom, I'll give you the last word here.
Yeah, you know, as Ben said, these charts are similar. They had a straight line move up. They've consolidated. They didn't pull back that much. That's a good market. That's what it comes down to, okay? When you have a straight line move, you get buying, but you need a consolidation. A consolidation is like building another cement floor. And, you know, this is consolidated for about 3 months. And it's a tight consolidation, and that's what you like to see. So we'll see how this shakes out, you know, in the next few weeks. But right now, it's in pretty good shape.
Right. Okay. Thank you both so much for the big three on this Friday. Did a great job. Ending the week, Tom O'Brien, CEO of TFNN, and our own Ben Lichtenstein. Thank you both. All right, coming up next, a special spotlight live from the New York Stock Exchange, Travel and Leisure Company. They have a new Sports Illustrated resorts, travel destinations. They're going to tell us more all about it. The CEO will join us next here on Trading 360. We'll be right back.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
at each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for Developing Stories. Joining me right now, Kevin Green, Senior Markets Correspondent here on Schwab Network. And you're taking a look at the very latest on the semiconductor stocks. What's going on, particularly with what the Biden administration's focus and crackdown on the dealings with China trade pertaining to the semiconductor stocks? What are some updates there?
Yeah, it appears that they might be imposing some more restrictions when it comes to semiconductor companies selling, specialized semiconductors to China in order to try to dampen or try to reduce the amount of risk when it comes to their use within military applications here. And we are also seeing some of these companies actually pushing back here a little bit when it comes to NVIDIA, Intel, Qualcomm, among others here. They are arguing that fact that this could obviously hurt their business when it comes to top line sales. And this could also create an environment where China could end up expanding their chip market and put us at a disadvantage when it comes to us here in the United States. So that's why we are seeing kind of this back and forth, and this retaliatory action that we have seen between the Biden administration and China is nothing new. We continue to hear the rhetoric and see the rhetoric increasing when it comes to certain areas of the marketplace. And right now it's starting to reverberate when it comes to some sales for these chip makers. But if you're looking at the stocks on the day, the semiconductor index, I mean, it's up around 1%. We are seeing a pretty nice rally across the board in the equity market. So they kind of shrugged it off for now, but this might be something that does stick and will be talked about during the earnings season that's coming up in a couple of weeks.
Thank you for that. And then we'll turn our attention straight over to Elon Musk, because a new lawsuit from the SEC, I saw this breaking yesterday. It doesn't seem to be a surprise, but the interesting correlation is, or if any, Tesla cutting prices on vehicles today. Is there a theme happening here, and how likely is it that Elon Musk will actually appear and face the SEC?
Well, yeah, so the lawsuit is to be able to get Musk to come in and answer questions around the Twitter acquisition, which is now called X. I'm not sure if there is a direct correlation, but you are correct. We are seeing prices being cut.
I don't know if Biden's speaking. AMC 7% there, almost up to $9.
Wheel drive by around 3% when it comes to
GME up
price,
2%,
Model Y.
1502. Market's kind of squeezing.
Seeing just across the board, not only here in the United States, but
GNS
also
holding
in China.
15%. Back to VWAP.
Maybe some demand slowing.
I made one more leg higher.
Indication that they're trying to get out existing inventory in order to build out new models and bring those to market. So I'm not sure if we have real clarity of that yet. We will have some earnings coming from Tesla here in the next couple of weeks. I think analysts will definitely ask that question when it comes to these price cuts, but we are still seeing the shares down, even though we are seeing green on the screen from the equity market.
Green on the screen.
Recover. It was down about 4%, now down about around 2% at this point in time. So not sure if there's a direct correlation, but there does appear to be
almost that next leg up
where you're either trying to clear out inventory because of something to come, or we are seeing a little bit of demand slowing down here in the United States, and that's kind of the trend that we've seen.
SPY ripping, man, up 0.5%. Free market was down 1%, 1.5% today so far, and it could keep going. I mean, this thing has been building up so much liquidity for bulls. We got to look at the top of the channel here.
Joining me right now is someone who knows
see if we get resistance up here.
Super pro on that, and that is Mike Brown, President and CEO of Travel and Leisure
Mike
Company.
Jones.
So glad you are here. Thank you for being with us today. And I notice a football because the brand is expanding and it's going into the Sports Illustrated theme resorts as well. Tell us about the brand a little bit.
Well, it's great to be with you today. Great to ring the bell and celebrate a milestone, which is the launch of Sports Illustrated Resorts. And what is Sports Illustrated Resorts? It's lifestyle hospitality brand where we've announced our first project next to the University of Alabama, consisting of hotels, condominiums, vacation club, and surrounding it with the experience that is Sports Illustrated. And most people in America are passionate about sports.
0.6
and
on
we're going to bring
GME.
that experience, both the legacy of the universities as well
See,
as
7
your
1/4.
participation experientially
Close to that 9,
into the
10 level.
resorts in college towns across America.
That is so much fun. I think college sports during the pandemic, I think sports and gambling and even, you know, trying to appreciate life a little bit more. People have changed their ways a little bit. We see consumers spending. They do want experiences, and I think they love sports. More and more, we're seeing a lot of dedication to college sports. So how
Should have left a runner. Always.
these Sports Illustrated sort of
Leave the last one for the homies.
locations that you're
I learned
gonna
nothing
continue to build
yesterday.
out, you have Alabama.
Because I was still
Where
using my
else are
trading
you
account.
looking, and are you gonna have
My
things
position
that are
sizing was pretty
sporty
small.
on the
So I only opened up 2
Well,
contracts.
let's start
I
with
sold one
the
for profit,
expansion
what, right
plans.
here.
We definitely plan on
So the
announcing
second one, I'm like,
several resorts by the end of
leave
this
half for the
year.
homies? That's a lot for those homies.
Well,
What they would do for me.
Let's just say no one likes to lose
So I
to
closed it
Alabama,
here.
so there's going to be some
That
competitive juices
was
in
another
major,
$300
major
on it,
college
probably.
towns that we're working to, but we don't want to get ahead of the school or the community. But needless to say, big sporting locations are where we want to
GNE?
be. You bring up an interesting question on what else. Let's
Is this
take
the one
the
you were
University of
trading?
Alabama, 41 times on the cover of Sports Illustrated, more than any other college. We want to celebrate the legacy
consolidating.
through a Hall of Champions or a trophy room that shows all the history. But when you go to Tuscaloosa, you also want to experience events. So there will be dedicated events proprietary to Sports Illustrated with celebrities or with concert series. Sports Illustrated Fit, an elevated way for health and wellness, just to name a few. So you aren't going to be staying in a room only. You're going to be living the Sports Illustrated lifestyle.
It wasn't that long ago that you said you weren't really seeing signs of weakness pertaining to the consumer. What are you seeing now? I mean, a few months have passed since I read that statement. What are you seeing as far as the consumer and their desire to travel?
Well, I'll share 2 parts of that. The first is that the longer the uncertainty, higher, longer interest rate stays around, it creates a natural pressure. Leisure travel is resilient, it's strong. The question is how long will the consumer endure these
I don't know.
higher
Bouncing off
interest
VWAP.
rates in the macroeconomy?
Like I said, I would have scaled out some at $1.
As every
Next
month pass,
next
it's
price
a
on it,
greater
let's say
concern as it
$1.10,
relates
which
to leisure
basically hit.
travel, but
Yeah, it hit
ours has
$1.10.
remained resilient until now. I
But,
do think as well, though,
yeah, it's holding up
macro
nice.
trends,
Nice
we saw
bull flag
people
being built.
really
Holding above
benefiting
VWAP.
from what they didn't do during COVID,
Like it.
cruising in Europe. And I think as we look into 24, we're going to see domestic travel return in force.
Without a doubt. And when you look also at
These
the
other ones
different
beating up
properties,
rally?
you
No.
mentioned clubs, hotels, condos.
Ish,
and
Rad's
you're
up
looking at the
2.8.
credit of folks. I mean, are you being a little, you look at the health of the consumer, are you being a little tighter on credit or how you're running it to make sure that the people are signing up for what they believe they can afford? You don't have as many defaults and delinquencies.
Absolutely. One of the elements that we looked at when we went through COVID is we wanted to elevate our the credit quality of our consumer, and we've done that. And the FICO score of our consumer now is comparable to everyone in the public space. And it's important because you don't want to buy someone and not go on their vacation. So we've seen our delinquencies really hold to pre-COVID levels and the credit quality of our consumer elevate. And it's important that it stays that way.
Tell me also about the inflationary environment and the labor
Eyes just
environment. We had
squeezing.
an unbelievable labor report today.
You closed, what, 10 minutes ago?
I saw 336,000 jobs added, which I know you saw as well, but I was so taken aback. I just didn't expect it. And revisions on the prior months, and you have travel and leisure just adding jobs exponentially. It just seems like, what problems, what issues, and yet people have 24% credit card rates.
Well, look, hospitality was really hard hit during COVID, and it's roaring back in 22 and 23.
Is it back to
So today was our taper.
We're back to
Bottom here.
levels as it
Making inverse head and shoulders potentially on that hourly. I wish I had the break to the top of the channel here.
Okay, so that's good.
But the element
Need to see some
is
pullback to the
higher
position. Oh,
interest
this is
rates
sorry.
and a lot of
Not,
our wages, people
just
talk about
quick little
minimum
bull
wage.
flags,
We're
really.
well above it in our markets because it's competitive. So
Just
the
melting
question
up
is
to go
that
those
tension of
contracts worth.
higher interest rates and higher inflation.
I
At some
don't want to
point
even
it's gonna
see.
give. I was surprised by this morning's number.
Oh, yeah,
and
they
I
doubled
continue
from
to be
there. It
surprised.
was $300
At
bucks
some
from where I
point,
sold
we're
here.
gonna hit an inflection point where
Doubled.
it's going to start to pull back, and it feels like it's getting.
By
really
bottom.
And the inflationary pressures, for example, oil shot up. I mean, that was something. I mean, if you're moving goods or doing all, you know,
What, these contracts like 5x? I bought them at 184. They're at 6135 right now.
That's absolutely
6135.
right. I think in our particular case, not to say that we're dramatically different, but our consumer, instead of taking a mid-haul flight to the Caribbean, that
Gotta leave
involves
one
a
for the
plane ticket,
homies.
they'll get in their car and maybe drive from New York to Washington or to a Southeast beach. So our consumers will not give up their vacation. They'll just alter how they go on vacation.
Sounds so great. Where should people go? Just name some of
This
the
was
best
the nice
spots.
grab right here.
I still believe
Happened
Southeast
fast. Wasn't paying close
beaches
enough attention.
continue to be absolutely on the hot end of every travel environment. And we have great ski locations in Avon, Colorado, and Park City that I encourage for the winter time.
That also sounds very beautiful. Mike Brown.
And eventually Tuscaloosa.
That's right. Okay. We have a lot to look forward to. You'll come back and give us some updates,
Thank you
I
very
hope
much.
soon. Thank you. Mike Brown, President and CEO of Travel and Leisure. Coming up next are disruptors, and we'll take a look at PayPal. Obviously, it's been beaten, but at this point, one analyst is liking this fintech stock. We'll take a look.
Wow. Wow. Dude. Ugh. Not cool to look at. What the heck? I would have, I would 2x my account today, my small account. Time for some poker. This move is getting gnarly. Almost a 2% swing. Dead cat bounce engaged. Still need confirmation to break out of this channel, which we might not get today. Would have been very easy holding calls through here. Just on that escalator mission. %3 on GME. AMC's coming down a little bit. Did break yesterday's high though. See if we can hold that 850 support. I folded. folded again. It's fast. Am I playing fast table? No, that's normal. Jeez. Can't believe how much those contracts ran. I didn't see I had a king. Whoops. 10 minutes to noon. Maybe I'll be able to catch the move back down. Thanks guys for your likes and your support today. It's time to thumbs up the stream if you haven't already. We're at 11 likes on the day.
Question on, why is this happening and what's how do you solve this, right? I think some of this is an offshoot of the California minimum wage increase that happened recently. And so for a lot of those employees that were making roughly $20 an hour, as California minimum wages have gone up to 20, they're expecting a corresponding increase in their wages. And really, I think that's what's driving some of this right now.
Right, understood. So at this point now, Lee, you believe that the Kaiser strike will be resolved somewhat quickly. And what kind of other exposure or other companies may be facing something similar?
Nicole, first, thanks for having me on. And Brian, great to see you. Loved your research for quite a long time. Well, look, there's reasons to be hopeful, quite a few. I would say number one, this is a significant strike. It's the first time in 25 years since relationships between employees and management at Kaiser has deteriorated to the extent of striking. So what we know is there's been a long period of consensus where they've been able to seek resolution and compromise. So that goes a long way in building trust and good faith, which is so essential to reaching resolution. I would also mention that this is a planned strike of just 3 days. This is Wednesday through Friday. Workers are expected to be back next week. That is the plan. That's a good signal. I would say also negotiations have continued even after the labor agreement expired, often well into the night, and progress continues to be made according to our sources. Those are all very good signs. I'd also point to the fact that in late 1990, Kaiser management did adopt a very collaborative versus anti-labor tactic, and that is why they've been so successful. What we're seeing here is, to Brian's point, a much bigger issue, which is you're seeing CPI that spiked at over 9% last year. That was the highest increase in year-over-year inflation since 1981, and wages simply aren't keeping up. The biggest thing I'm concerned about in terms of resolution of the Kaiser strike in general is how far apart they are in terms of wage increase.
All right, so that's something that we'll continue to talk about. Brian, feel free to jump in on that. Also, as I look at the THC stock here, I'm curious to hear about where you think this stock or some of the other stocks are headed. Which ones do you have buy ratings on?
Yeah, so Nicole, just to that point, and Lee, nice to see you as well. So first, like on the tenant side, right? So I think, and even the Kaiser, ask from the union. So they're asking for 7%, 7%, 6%. So a series of increases. What I would point to, Nicole, is that actually in May, so HCA in California had a similar issue with when the unions came and said, we're going to strike, and then HCA eventually settled that, where they committed to essentially a 15% increase in wages over a 3-year period. So as we think about that, to Lee's point, I mean, how far apart are they? Is that 15% that HCA agreed to something that probably satisfies it? We just don't know yet, but that's probably within ballpark if you think about it. So as we think about Tenet, right, the stock went down the other day, partly because of also the announcement that the union is going to set a strike for later this month in California. And as I think about numbers that are out there for Tenet, really the street's already expecting them to raise wages sort of in that 4 to 5% range next year. So I don't think it's going to be that big of a surprise or big of an earnings hit.
Yeah, and you said RD&T likely to be the beneficiary of the techs that are striking over at the Kaiser facilities. And I saw you had 5 buy ratings there. Lee, final quick thought?
Well, I'd say what we're seeing now is emblematic of a longer-term concern. The average age of registered nurses right now is just over 50. We had 100,000 nurses leave during the pandemic. Another 600,000 have registered their intent to leave over the next 5 years. That's per a research survey. And we have roughly 25% of current physicians in the U.S. age 65 and older. This is all during a time in which utilization is expected to spike. The number of folks who are in the 65 and older cohort has increased by over 70% over the last decade. Now, of course, those over 65 are the ones who consume healthcare services the most. So we have spiking demand at a time we have a real labor exodus concern. The real question is going to be, how do we address healthcare access as we deal with these demographic dynamics?
Yeah. Thank you both so much. Brian Tanquillet, Jeffries, Lee Brown of Third Bridge.
Spy still going, man.
For being with me, and thank you, friends, for going through a busy day. In fact, the markets have taken off. The Dow Jones Industrial Average is up nearly 300 points
Almost a percent to the upside now. 2% swinger. Are all those people saying 5% drop today on SPY? Heck, what they want you to think.
You could think it.
Alright, Baba, that was you. Someone else was saying it too, I think. Yeah, we're getting our dead cat bounce, our short squeeze. Beginning of the Santa Rally. There's 1% on SPY. It was negative 1% pre-market today. Those contracts went from $1.84 to $7.85. That is neat. I played this morning. Let this couple be completed at 4:32. Might have a little handle pullback here though at this high also. This is sort of the smaller cup. Or not. Still going. The top of that channel on SPY. that. What? I raised. Exactly, yeah. Stop losses. Cutting losses is the way. Consider just paper trade next week. Do it with weeklies instead of dailies. Try something new.
Now, I want to bring in my co-host for today's show. He's agreed to spend the entire hour with us, and that is the Director of Trader Education at Charles Schwab, Mr. Joe Mazzola. Joe, what a spectacular Jobs Friday. This is why we love this business, Joe, because figuring out the difference between the interpretation of the data and the trading of the data, that's what is making this day spectacular. Welcome to the show, Joe.
Thank you, Kevin. I think you hit all the superlatives. I don't know if I have any additional ones to add.
I'm personally out.
Yeah, no, hey, you're fired up. It's a fiery day. It's something to get excited about. I mean, look, I think that, you saw the futures after the jobs data came out. They plunged. I think at one point S&P futures were down close to 40 points. And here we go, a bit of a massive reversal here intraday. I don't know how much of it's a technical reversal. We came pretty darn close to hitting that 200-day moving average. You might have just been a scratch away or so, but I mean, we got down, bounced, and you started to see the algos really start to take over the trade and push it back up. I think that when I look at the data, there's a couple things to really consider there, Kevin. It's good. I mean, it's good that we're creating jobs. But I think that there's a little bit for everybody there, right? I mean, the bears might look at it and say, hey, this just continues to push up the probability of a move in November. I think that moved from like 81% chance of not happening last week to about a 32% chance of it happening this week. So you started to see that move. But I think the thing that, maybe some of the bulls could glean from the data was the fact that wage increases weren't nearly as much as expected, and they're showing that wages are slowing down. I think the other major takeaway, Kevin, is that when you look at the revisions, really up until this report, revisions had been down for the prior months. This is the first report where we've seen an upward revision. We saw that in July and August, and I think initially the market looked at that as a pretty bearish signal. So I don't know. It's really hard to say what piece of data did the market look at to turn this around. To me, I think it's more of a technical bounce, but I guess we'll see in the next coming days.
Yeah, Oliver and I were having a discussion soon after the number came out, and we talked about the fact that big jobs number, but the inflation. The market was reading it wrong in terms of the inflation. The inflation was relatively muted. Both were a tenth less than expected. I mean, if wages, and here's my question, Joe. You know what? Let's have a discussion with Jenny Horn first, then we'll come back because we have a lot to talk about on this topic. But before we do, let's bring in Jenny Horn live from the Schwab Network News Desk. Jenny, a massive takeover
12
in the oil sector today, Jenny. ExxonMobil buying Pioneer National or in advanced talks. It looks like a $60 billion all-cash deal.
I got some puts.
Jenny,
Not a real reason.
about the Permian Basin, isn't
Probably
it?
shouldn't.
It is exactly all about the Permian Basin, Kevin, and this is a
It's
really
pretty early
interesting
still.
story, and I'd say sparking some relief in the
Safety
energy
for the
sector. Of
SPY
course,
is going
it's
to
been a
be
pretty brutal
most likely
week.
lower than here
The $60 billion
by a pretty big
deal,
margin.
or
So
alleged $60 billion deal, I should say, because right now we are
have a little head and
seeing
shoulders, but we're
preliminary
still in this
stages,
channel, so I
is
wait.
set to be possibly unveiled as soon as just in the coming days, according to the Wall Street Journal. So
I
it
just
could
should
be
let
one
the
of the
runner.
oil
Would have
group's
had a
largest purchases
300%er
in
today.
20 years. We have seen that
Give a
Pioneer,
runner
which
for
has
the
a market
homies.
cap of roughly $50 billion, is the largest crude producer in Texas. So if completed, it would be the largest tie-up for Exxon since the merger of Mobil back in 1999. So that goes way back, obviously. Now, what does seem to be clear is that the street likes this deal. I mean, JP Morgan said it's unclear if the price tag of around $60 billion includes the assumption of debt
It
or
seems so
represents
fast.
equity position alone, but thinks that the stars could be aligning on several fronts, making the deal plausible. That's JP Morgan's words, or analysts at JP Morgan. So they see this potentially going through. We also, of course, know that this then would give Exxon further exposure to the Permian Basin, like you said, which they have been working on for now several years, but they've yet to see, I mean, that necessarily come to fruition in the way that they would want. They would mean shareholders would receive around 13% premium with this deal, but more importantly than that, access to the Permian Basin, which would be then a way to shore up profits going forward. We also know that given the lift that some of these energy companies have seen in the last couple of years, Exxon is at this point very cash rich. They had about $30 billion in their cash reserves as of last fiscal year. So it seems like a good time, especially considering that shares have pulled back around 4.5% this year, a completely different year for a lot of these energy companies than last year, obviously, when they were some of the best performers. But nonetheless, perhaps we could see some M&A and consolidation now in this industry, given some of these valuations that have been reset here.
Jenny, it's good to be cash rich, and Exxon clearly fits the bill there. You know, this deal alone would make Exxon produce about 1.2 million barrels a day. That's more than many of the OPEC countries. I mean, I guess the question that needs to be asked, and I don't know if you've seen any analysts put any probabilities on this, but I mean, what's the likelihood that regulators let something like this pass?
Yeah, that's a great question. And to speak to that, Pioneer is the Permian's largest operator with 9% of their gross production. Exxon's number 5 at 6%. So combining these two would make about 15% of operated Permian production. Only 6%, though, of U.S. production. But still, these data points are relevant given the fact that we could be seeing some FTC scrutiny with this deal. I mean, this can make a combined, absolutely massive presence in the Permian Basin, which is obviously what Exxon hopes for. But we also know that oil companies have been, I mean, there's sort of these mixed pictures because they have been reining back some of their spending. So then it could be seen that right now, I mean, shares have fallen. Its valuation looks a lot different than it did about a year ago. But one analyst I was actually reading was saying that this could set the stage for more large-scale M&As. At Smead Capital Management said this is the beginning of some massive consolidation. So they do see the fact that this is going to go through and this is going to set the tone. Obviously, we'll have to wait and see. I would be amazed if we didn't hear pushback from the Biden administration, which just a few years ago was accusing these companies of sort of lining their pockets at the expense of consumers. That has been
I got some calls there too.
For some of these rising fuel costs. So it would be amazing to me.
I don't know if there's much more upside, honestly, but whatever.
It seems like there will be some thoughts of antitrust concerns, but as we know, with so many of these
Seems like we're at the top,
stories,
but
I know in different areas
I've seen 1% days turn to 2% days.
Bark and no bite.
Yeah, you know, Jenny, if you look at the Permian Basin, Chevron's the number 1 producer in the Permian. ConocoPhillips is number 2. Number 3, Pioneer Natural Resources, now being bought by ExxonMobil. So incredible investment in the Permian Basin here in the United States. So Jenny Horn, thanks for coming on, sharing some time with us on a Friday. Jen, have a great day. All right, Joe, returning to our conversation now after that large takeover news, let's get back to the data that's driving this market, because I say it all the time on the Schwab Network. The non-farm payroll number, unemployment, is the number 1 data point of the month because of it, the breadth of the information that we get from this. So when you look at some of these numbers, and you mentioned the revisions up higher, so this jobs number is even stronger. But here's my question, Joe. Here's the discussion topic.
Couldn't get the fold.
People that watch the markets, economists, going to explain this jump in jobs. Where are these jobs coming from? And with everything we thought, if you would have told me, Joe,
again, way out of the money, just gotten one at the money.
but the wages would
Especially
be strong,
dailies. Days have over.
More realistic, and it's the
My puts are
exact
dumb.
opposite.
There's
Why
no
is that
confirmation it's
happening?
moving yet.
It's a good question, Kevin. Where you saw the biggest job
There's no
growth
sign of
was leisure
tapering. This
hospitality.
looks like a bull flag.
Manufacturing and construction spending was
I
strong.
got calls also.
Those
Well,
are the
I'll
big
close the calls if
drivers
we break
right
this.
now in the jobs market. I think the thing that's interesting is if you look at the unemployment rate, it stayed at
Just to alleviate some of the FOMO of me closing my calls too early.
Participation rate, which is looking strong right now, it's at 62.8%. That's showing that people are coming back into the market, and I don't know if they're doing that because the cost of living has gone up and they need to come back and earn those wages. But right now, I mean, just look at the data that we saw this week. The job openings was higher than expected. ADP basically showed that it's kind of an irrelevant data point because that came in, way under where the actual jobs numbers were. But this is all pointing to a jobs market that's holding firm. And at this point, it's holding firm without having to push wages up too much, setting up for a better move for the Fed, or at least a better runway for the Fed, because if they can keep labor strong without necessarily hitting unemployment too hard, and they can do that while at the same time keeping the cost of wages lower, that helps them out. And look, I think the other takeaway, not just from the jobs report, but what we've seen all week in terms of what's happening with the 10-year rates is, as the 10-year rates continue to move up, think about what that's doing for the Fed. It's making their job easier. It's making the likelihood of a cut or maybe increase in the back end of 224, and the likelihood of additional raises kind of decrease, because the financial conditions index, it's going to start paring back as you continue to see the interest rates going up, and that's actually helping the Fed.
Yeah, to break down those numbers, leisure and hospitality, 96,000 jobs. Government, 73,000. Healthcare, 41,000. Also, job data from professional, scientific, technical services, and social assistance. So a broad range of strong jobs. But before we go to our first break, Joe, I want to talk about one thing. When we're trying to figure out what this means, right? What this big jobs number with moderate growth in wages means. Is it a leisure and hospitality question? And Joe, here's the one that we may look at down the road. Is this an immigration story about more jobs at moderate incomes? I wonder if that, over the long term, will play a role in jobs.
I think both factors are playing into this, because if you look where the gains were the weakest, or even where you saw some cuts, that happened more so in tech, right? In technology, and that's the higher paying jobs. So basically, jobs are being added, but they're being added at a lower income, which is keeping the wage number down. But so it's going to affect that number. It skews it a little bit, and I think we got to keep an eye on that, because if that's the case, if that continues to be the case going forward, there's going to be a little bit of a disconnect in terms of the job seekers and the jobs available. So something to keep an eye on.
One last comment from you, Joe, before we go to our first break. It seems to me that the narrative on interest rates is evolving from higher levels of interest rates. It seems to evolving to no, rates are restrictive enough, and it's the duration. It's higher for longer. Seems to be creeping into a lot of the discussions from Fed members. Your thoughts on that?
I would agree, and I think the other data point to add to that would be, what does higher for longer mean for different sectors? I mean, just take a look at what we've seen over just the last 30 days or so, Kevin, in terms of the market. What are the sectors that are getting punished the most? So the interest rate sensitive sectors, utilities, real estate. We've seen it even on the consumer discretionary, consumer staple side. So what does that mean? That means that higher for longer means debt financing costs is going to continue to go up. So keep an eye on those companies that are what we call long duration, meaning that they don't generate cash flows in the near term. It's something that they're pricing out for longer term, and also keeping an eye on companies that have high interest debt coverage ratios, meaning that they're going to have to pay a lot to cover that debt. Those are the companies that I think could be the weakest going forward, or at least the most receptive to pullbacks.
Yeah, utilities always carry a lot of debt, so have an inverse relationship to interest rates, and of course real estate with the obvious costs there from higher interest rates. But we got a lot to talk about today, Joe, and we got a lot to go over. So let's take our first break of the day, come back with our first trade of the day, and that's going to be Chipotle. This is the fast food company that's really growing and
It is still so early. It's only 12 o'clock. They have plenty of time to see a place set up. Yeah, we didn't have any tapering, we didn't have any signs of reversal, so it's most likely bulls building liquidity. Or just starting to chop up here at the highs. Given, yeah, it's not even the middle of the, it's barely the middle of the day. Okay, SPY's coming down a little bit. Basically just bought puts at the resistance, which is not the way I like to play it. This could take the last 10 minutes to get down to VWAP or some moving averages.
Trade in Chipotle that, you know, trying to figure out the strikes on a stock that moves like this is always difficult. I've gotten several emails from you changing strike prices, but that's what trading is. It's constant.
Trading is, folks. That's all you need to know.
S&Ps were still down 30 points, and Chipotle was down quite a bit. Got all the way down to that 200-day moving average, and so there's a few levels that are important right there. There's that 200-day moving average that we see. And
so one of my puts here, since it's kind of a blind put anyways.
For the Fibonacci retracement at the 61%, all kind of
put a stop on the rest or on the other one.
Okay, well, let me try to put together a trade that can get us below that level and do it for a decent amount of credit. And what happened? The stock keeps rallying and rallying and rallying, and so we have to adjust our strikes. But basically, we're looking at selling a put vertical. Taking advantage of the fact that the implied volatility has started to really kind of ramp up a little bit in this name. It's in the 55th percentile now. So when you and I and Tommy, we talk about how do we set up these trades? Well, one of the first things that I personally do is I look at where we are in terms of implied volatility.
Yeah, lucky with that
we're
river.
Kind of up above that 50% range. That means that I'm getting a little bit more bang for my buck.
He was calling with his potential for a flush.
If we're below that 50% range and maybe down in the 35 to 40, I'm getting a little bit more bang for my buck by owning premium. So in this example, I wanted to sell premium. Second thing I looked at then, Kevin, was the skew. And right now, if you look at kind of the put versus call skew, it's a relatively low level. It's right around 17, 18% or percentile, which tells me that the puts aren't really as bid as what they've been in the past. Now, some people might hear that and they might say, well, why are you selling a put? Why are you selling a put vertical? Remember, if you're selling a put vertical, you're selling a put that's closer to where we're trading right now and buying a put that's further away. So in doing so, by buying that put that's further away, I actually am buying that skew. And I don't mind doing that right now because that skew is a little bit cheaper than what it's traditionally been. So the strikes we chose for this one, or the final strikes we had to choose for this one, was selling the October 20th, 1760, 1755 put vertical. You can probably do that somewhere between $1 and $1.20 right now, based upon kind of what the stock is doing. It keeps you out of the earnings, right? So the earnings announcement is October 26th. That way it keeps you a little bit out of that binary event. Somebody might do this trade if they're looking for a bounce. If they're saying that, here's a level where we're starting to see a little bit of capitulation. We're seeing the vol come up a little bit. I mean, maybe we want to take advantage of that. And we're expecting a short-term bounce. That might be somebody that would look to do a trade like this.
Yeah, the learning aspect of this segment, Joe, is not necessarily what strikes you pick at what hour of the day. It's really the strategy. And the strategy is, with creeping higher implied vol, which you see on the chart, I've got the current IV percentile trading. I'll check it here, 54%. So it's getting into the second, the higher half of implied volatilities. So what you'd want to do is something that focuses on short vega. Now, the strikes you choose, whatever, remember, this is a practice trade in paper money, but the strategy is what our listeners should be viewing here, Joe, and that is the taking advantage of slightly higher implied volatilities to get. This is a negative vega strategy that is profitable if the stock stays here, if the stock goes higher, or if the stock goes down in a small level. The risk on this trade, and the risk is the width of the strikes minus whatever credit you take in, is the risk on this trade. So if you sell it for $1 or $1.20, the risk is either $4 or $3.80. And that, but you're collecting theta, you're risk defined, and you're doing a high probability trade that is, selling short vega when implied volatility is higher. Joe, final thoughts here.
Yeah, I noticed there was a couple downgrades, and one of those downgrades took the stock, this from Oppenheimer, took the stock down to about 225 price target from 2,300. That's still $400 away from where we're at right now. And even on the trade itself, you have about $80 of cushion where, from where we set up the strike. So there's a little bit of room for it to go. The stock can move $80 fairly quickly. I mean, especially at its nominal price level or notional price level. But just be aware of kind of the risk reward on that. If you're looking to make 120, then you're looking to risk 380. So that is the risk reward on this trade. And like I said, you get about $80 of price cushion before you hit that break even.
Short put vertical in Chipotle, taking advantage of the higher implied volatility. All right, let's take our second break of the show. Come back with our Like Fuller segment. Where
For a break here, I'm gonna grab some calls.
Chipotle. He'll go over
On
McDonald's.
the secondary
He'll
account.
go over Starbucks. So take a quick break. Come back with Joe Mazzola and I in a few minutes.
Take some profits at the high of the day on that. Not a huge amount of upside at this point. Still early. It's still 12:30. Just waiting for me to raise. There with you. Pocket Kings. Tackling Fuel. I don't like that straight or that flush. Dang it. Hope we didn't have diamonds. Pocket tens, what the heck? That was being sarcastic with that good luck. Like, shoot, he had diamonds. Do I fold this? Wait, ace five? No. Pocket threes? I don't know what people had. What this guy have?
just doesn't.
I'm having a coffee today.
It's going to be interesting to see how all this shakes out. When you look at
Coffee Money Friday.
really important one to look
I was up
at.
really early.
Chipotle again is leading the way at 64%, and actually,
I
surprisingly,
wake up really early pretty
McDonald's
often, but I
beating
usually
Starbucks,
don't get
which,
up and
it
do stuff.
told me that a couple
I
years ago.
did
I'd
this
have been
morning.
shocked. So McDonald's at 63%, not huge, but a 4 point still significant over Starbucks. So again, another concern here for Starbucks and another kind of check
My
mark.
contracts are losing value to the puts even.
And if you look at the stock prices, it
Just
makes
'cause of
sense.
theta
I mean,
decay.
Chipotle's outperformed the other two. They're all off around 15, 19% from their highs, but from their lows, Chipotle is doing much better. It's up almost 40% from lows of the year, whereas McDonald's is just barely off the lows, and Starbucks, again, about 13% off their lows. So you can see here that dimensions of Chipotle just continue to go up. The shares have been hit. As I said, they're down about 15% from highs, but they're doing much better than the other two. So you got to pay up if you want the best, and so that's kind of where we're at right now. So for me, it's a question of, I think Chipotle is the strongest moving forward, but valuation-wise, relative
three.
to what they've been trading at, McDonald's might
Call
be
that
a
with a
little
three.
bit better play. But either way, I'm
Done.
definitely avoiding. Starbucks. They're on my no-go list here. So it's just a question of Chipotle versus McDonald's. Do you want the best and pay for it, or do you want a rock-solid performer over the years that's down a little bit but still doing fairly well in McDonald's? So I'll leave that up to the viewer, but I'd say my main takeaway is avoid Starbucks right now.
All right, so it sounds like you're not the only one avoiding Starbucks right now. Landon, let me just ask you this question kind of flat out. Like, what's Starbucks doing that is pushing away the retail customer? Is it product selection? Because it seems like they've done a really nice job with the automation, or at least with the
This
the
whole
platform,
just
the online platform.
move right here just
and their
smells of
digital
bulls.
platforms. And they were one of the first to market for that. But boy, for some reason, they're just not resonating with the consumer right now. What in your mind is causing these
This
issues?
looks like bulls building liquidity.
I think a lot of it has to do with price, and that I've always thought that they had the most price resilient customers, but I do think that's a potential problem for them. And it just continues to go up and up, and everybody's feeling it. But McDonald's is always going to be cheaper than Starbucks, right? And
Jack?
Chipotle is probably always going to be cheaper on
Yeah.
what you're buying type of comparison. So I think that's really important. But as I talked about, I see the automation coming in, and expenses are only going to go lower. We've got
He's
they're
lucky the
working
10
on
came out on the river. I would have folded that.
robots to do all of the cooking. There are already ways
man,
to
lucky.
take orders through the touchpad. It will not be long, mark my words, maybe 2-3 years before we're going to have drive-through AI listening to you and taking your order, and it's not going to be a person there. There might be, one or two people in some of these McDonald's restaurants throughout the company, and the rest of it's run by robots and AI. So it's going to be really interesting to see how that changes the landscape, because you can't really do that in a sit-down restaurant. So fast food or fast casual is going to get way cheaper, I think, relative to the sit-down restaurants over the next few years. So companies like McDonald's and Chipotle and Starbucks are poised to really do well and take advantage of this technological innovation, whereas maybe some of their competition, the sit-down restaurants, just can't do it.
Yeah, I guess people don't want a machine to make their pumpkin spice latte, Landon. But here's my question going forward. Yeah. Here's my question, Landon. Some of the articles I read, especially about McDonald's, talks about the fact that they make now 62% of their income come from the franchises and not necessarily the food. Should they be looked in a different light from fast food? They're more of a real estate investment trust than they are actually a fast food company.
Right, I know, and that's the other thing that kind of makes me lean towards McDonald's as the value play here. I mean, they are extremely resilient. I mean, they're going to make it. They're going to figure out a way.
Yeah, McDonald's has been a
to
real
make
estate
it,
play
and they're very
pretty much
different,
forever,
like you said. They've
as
got
long as
the
it's been
real
public.
estate play, and they're going to just continue to crank out profits. So not that Chipotle isn't going to do that, but they don't have that real estate piece like you talked about. So McDonald's, I think, is the safe play. Like, if you had to pick one to hold for 25 years, maybe McDonald's is the way to go. But if you're looking for just the best performer over the next 2 to 3 years, I might go with Chipotle.
And they just raised their quarterly dividend 10% as well. So this company continues to give money back to their shareholders. Landon Swan, great coverage of these fast food stocks today. We appreciate you coming on, as always, on a Jobs Friday. Have a great Friday, Landon. All right, Joe, it's just you and I now. And, you know, McDonald's is a different animal, right? They play different. They're a low price point versus a little bit of an elevated price point when you think of Chipotle for food. Starbucks, you know, these are interesting comparisons that we make with these three companies, because it's really three companies doing three different things, Joe. Your thoughts on the comparison between McDonald's, which is, in many people's opinion, a real estate play, and something like Chipotle, a clear growth opportunity?
So I thought Landon made a really interesting comparison when he was talking about maybe on the per ounce, I guess, if you want to look at it that way, price for the food products and Starbucks relative to Chipotle. Because I always looked at Chipotle as kind of a premium brand within that fast food market, fast food sector. Whereas he's saying, well, look, you're getting X amount of food for $10, $12, whereas at Starbucks you're paying $6 or $7 for about a third of that of what you're getting there. So yeah, when you look at it from that comparison standpoint, you can probably feed more people in your family by going to Chipotle and buying a couple items than you do by buying a couple of the egg McMuffin sandwiches or egg muffin sandwiches at Starbucks. Now that's confused the McDonald's. Don't want to get that in there, but yeah, I mean it's interesting because I think, as I mentioned before, I think Starbucks was one of the first to market in terms of really take advantage of the digital footprint, which they did. McDonald's caught up very quickly, and Chipotle has done so as well too. But I think where Chipotle has kind of that brand equity is just the quality of the food and their ability, for you to feed a family at Chipotle, going there and making it kind of a quick experience getting in and out. I 100% agree with what he said. That if you're looking down the road the next couple of years, this is probably the space to be relative to kind of the sit down. I think people that whole service experience that had been pent up during COVID, I think that's rolling off. I think it's rolling off fairly quickly. That revenge, go out and grab a dinner because you couldn't do it for a couple of years. I think that's probably spiked, and I think that's done. And I think that this is probably the space to be.
McDonald's has a different price point than Chipotle does. They don't give those burritos away, Joe. They charge a nice little price tag for them. But when you look, the one similarity
way better
between
value
these two
than
companies,
McDonald's,
both
though.
stocks have sold off kind of hard the last several weeks. So if in a practice trade scenario, in a paper money trade, if you are thinking there may be a bounce in something like McDonald's, and there already has been a bounce today. It's already come up off some of the lows. We're changing prices on this trade too as well, Joe. If you looked at something right now, you've got McDonald's trading about $248, just under $249. Over the next couple weeks, if you wanted to do a passive upside play in McDonald's, the strategy might be something in the calendar spread family. What I looked at here is the November 3rd, so about a month from where we are right now, right around 4 weeks, and then the October 13th. So that out till next week.
Close
in
that
terms
put.
of the short side. And I looked at the 255 call calendar. Now that's trading, it was trading below $3. Now it's trading right at or around $3 going in. But it is a couple week spread, right? It'll give you an ability to roll, from next week out to November 3rd. Yeah, you can roll twice here. 2 times you can reduce the net debit on that trade, Joe. Your thoughts on basically, we'll call it a 3-week call calendar in McDonald's?
I mean, look, if the belief is that this sell-off has been overdone and you think you can get a little snap back to the upside, I guess my only question would be, when you see a sell-off this quickly, and this is not necessarily are you catching a falling knife, it's more of, if you see a sell-off this quickly, do you get a slow grind back or do you get a snap back if it does appreciate, right? If the selling pressure does start to abate. And I think that's the one thing that as a trader you need to look at with this trade, because you saw a fairly precipitous drop once we kind of broke through that 200-day moving average around 280 or so. And now, here we are, basically $32 below that. Do we get back up to that fairly quickly, or is it going to be a slow grind up? And that's really, to me, the determining factor on whether you want to do something like a call calendar, which will give you the ability to be long a little bit of that volatility, and have those rolls as you're moving back towards getting back towards that level if you get that, or if you think that you're going to get a real fast, rapid move back up, I'd rather probably sell a put spread. So if the idea is
thinking about the calls here,
and the bottoming is going to take a process, and you're going to get a slow grind back up towards where
there's
you're,
not like
you're
a
looking at that strike, I think the calendar
breaking
makes
that
sense.
channel is
If you think that
basically
it's going
it.
to be more of a snapback rally, I'd rather be a little bit short volatility, maybe short the put spread. So that's something
Alright,
that
I'm
I
gonna
would
get some
weigh
calls.
Before making this trade.
RSI perspective, extremely oversold, down around an 18 RSI. So yes, that is
These are Mondays.
exactly the trade that we want our viewers to think about. Is it the calendar spread? Is it the put vertical? Is it the both in a complex strategy, right? Both these things. This is what we want. We want our viewers to have that menu of choices that take advantage of these situations. All right, great job, Joe.
Wow. Nicely done with the menu of choices. Very well done.
Look at me. Do you see what I did there? All right, let's take our final break. Come back with a market update from Ben Lichtenstein.
Lichtenstein.
We'll look at our third trade of the day, and that is Starbucks. Take a quick break. Come back with more Fast Market. See you then, everybody.
Might come up a bit here. We'll see for profit targets. Not trying to give back gains from today, so gains they're there. They're not crazy. Not as good as the last couple days, but yeah, still don't want to give anything back. So I will be taking profits. But I'm gonna leave one for the homies. My day, I'll take off at least a couple. I have two pair there. Down for another % to the upside. Bye. Por favor. These cards. Heck. Taking a 1 off there. Gonna be very, very stingy. Since this setup, maybe okay. I don't know. Not my favorite. Kind of lost in the chart up here after that move. Like we could just kind of waffle around the rest of the day for the most part. Well, I should stop playing poker and draw some lines. Please don't have two pair. Same hand. He's sick of me muscling him around. I'll put a stop on the rest of these. Are you like one of those crazy people? I feel like when I look at my lines. AMC at the highs there, 8%.
For the next year in 2024, the estimate started in the United States on a same-store sales front about 9.5%. They're down to 5.1%, and in China, there was a tremendous amount of same-store sales growth.
AMC popping
24%.
8.5.
Come down to about
Hi there.
16%. So
there's $9 on
I think
it.
we're seeing a little bit of a deceleration in the estimates for growth, both the United States and China. I think if you look at the chart, that's also very telling. I mean, the stock has not performed well at all this year, and that's to be
AMC can
expected
break it.
considering a lot of even
GME came down. It's up 2.5 now.
Packaged food companies have performed poorly. I think Starbucks really fits in the narrative of the discretionaries, but at the same time, it's trading well below its 200-day moving average. That's not good. At the same time, also,
Spy bounces on this shoulder right here.
at it on a weekly chart basis, it's trading around
Head
right
and
around
shoulder.
its 200-week moving average. And I suggest this is a pretty important pivot point from a price standpoint in this name.
George, quick question. We didn't talk about this as much with the other names, but I think, we'll get to this with Starbucks right now. Labor costs, right? Today's jobs day. So we're looking at labor costs. There's a California law taking effect April 1st, pushing minimum wage up to about $20. How does that affect a company like Starbucks?
Did it just skip over my stop
push
again?
them towards automation? Do you see that being a reality going forward?
I think it did.
Yeah, I mean, I see that happening. At the end of the day, we know it's going to happen across the board, especially in the fast food service industry.
12.
Also keep in mind, it depends on what type of food that we're talking about versus, Starbucks, which is more customized orders at time that people order them. So that's a little bit different than maybe McDonald's, which is more standardized, let's put it that way. But nonetheless, I think Starbucks will implement more technologies associated with automation. That's going to be across the board. I think labor is a big issue for Starbucks because if you look at the store count breakdown, 42% of total stores in the United States. So it's an important demographic barometer of Starbucks profitability. That's going to certainly impact their bottom line. But I think Starbucks also, looking at it from an
Hard
estimate
fold.
standpoint and evaluation standpoint.
Yeah, so I had a limit at
with
214.
earnings
It closed me at
for
212.
2024, right around $3.50. I mean, the company's paying about
It's okay. It warns you.
dividend, about
Put in a stop loss.
65% of their earnings.
Be warned.
But the earnings
Volatility
growth is expected to be around 7.5%.
is here.
Now, traditionally, it's
You
around
might
10%.
not get what you want.
So that may be based
You
upon
might
expected
take
weakness,
a little off the top.
inflation cutbacks from the household level, but at the same time, the cost of
I don't think Fidelity does that actually, so that is good. Good thing about Fidelity.
Well. So, right now,
AMC testing that high there,
I
910.
don't think it's extremely expensive or cheap. Let's just put it that way. And I think it won't be telling in terms of the next move, either higher or lower, until earnings comes out next.
George Tillis, thanks for coming on, as always, spending some time with us on a Friday. We got to fly. We're running out of time. Have a great day, George. All right, Joe, similar to your trade in Chipotle is the trade that we're looking at because we have elevated implied volatilities in Starbucks. Now, we kept these strikes a little tighter. We put that short strike a little closer to the money. So with Starbucks currently trading 92.37, we went out to the October 27th, just a couple weeks out, 2 weeks out, and we sold the 90.88 put vertical. Now that's trading right around between 45 and 40 cents. I got it trading about 42 cents right now. But Joe, how do you look at a $5 spread versus a $2 spread from a learning perspective? This is a paper money trade. The risk is still just the width of the strikes minus the credit, but it's different numbers, isn't it?
It is different numbers just because, you've got a little bit less at risk per the $2, but you still want to look at it per dollar. I think that's the key. How much are you generating in credit per dollar? So that can give you at least a start.
Got a new high there on AMC.
Say, is there potential
Broke the
return on
910
risk
level.
worth it? In this example, you're going to anywhere between 21 to 22 cents per dollar at risk. To collect that 42-cent credit, depending upon where it gets filled. I think that's probably a little bit on the low end, but I think it's still within levels that you might consider attractive, kind of given where this stock is now. I think the bottom line really for this trade is a bounce in order. Are we starting to see some of that rotation back into some of these staples and discretionary names that have just gotten absolutely pounded? We talked about that at the beginning of the show. We said we were looking at the interest rate sensitive. Well, what about the consumer sensitive names? Discretionaries, staples, they were down 7% coming into the day in the last 20 trading days. So in the last month, are they due for a bounce? Well, if they are, if you believe that they're due for a bounce, then a trade like this might make sense.
Great job as always. And one thought to think about as we close out the show, make sure you're getting paid for your risk. Thanks to Joe Mazzola, the the director of trader education at Charles Schwab. That's all for our show today. Jenny Horn and Alex Coffey coming up next with Next Gen Investing. Have a great day and a great weekend, everybody.
Next Gen I. MC still going, 10 a quarter now. Is it 11% on AMC?
I can promise you it wasn't tracking for that this morning. So if you're trying to look for positives, you can find them here today in the market. And it's Friday. And as Kevin Hinks would say, you could ring the bell right now. I think bulls would gladly ring it and run for the hills.
Okay, I like your optimism for this Friday. I think I needed that because I was a little bit low energy, but now I'm excited because we are seeing green that is just continuing to build on the session. As always on this show, though, we'll kick things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes, and our FOMO discussion today is, of course, Tesla. We're looking at further price cuts as well as some interesting narratives surrounding, naturally, all things Elon Musk. And then we will look at Oppenheimer downgrading some of these auto retailers, O'Reilly as well as AutoZone. Last but not least, today we will look at Conagra as one analyst still sees some bright spots despite some lackluster guidance and a mixed result from the consumer staple yesterday.
A little bit of something for everybody on today's show. Conagra making its second appearance on this program, I believe in as many days as well. So looking forward to that. Maybe we talked about
AMC 12%.
But looking forward to a more of a breakdown with George Tillis on Conagra. Looking forward to auto parts right after we talk some Tesla. And then upvote down, but we got kind of like two twin themes here where analysts are not just weighing in on one particular company, but rather they're weighing in on sectors. We get to look at a couple different viewpoints, not only on sort of media and streaming, but also in the payment services. It's sort of this new world of financial technology. So looking forward to upvote, downvote, not endorsements, not recommendations. We'll kick it off with the streaming combo here, Jenny. We're going to be talking Netflix. We're going to be talking Disney. Analysts weighing in.
Analysts are weighing in, like you said, weighing in on more than just these
volume there on AMC too.
Across the board on media and telecom stocks. It's Bernstein. They did also start some coverage on Paramount as well as Warner Brothers Discovery. But we'll start the conversation off here with Netflix, as they did start Netflix with a market perform rating and a $375 price target, saying that the decline of linear and transition to DTC are well-established narratives, and future growth and profitability will be outpacing the linear decline with this DTC growth and having scale for profitability. Now, Seaport also did start coverage on Netflix today with a buy rating and a $482 price target, so a little bit more optimistic than Bernstein, saying that really they are looking at the core media industry names or those with owned IP as well as studios and streaming services, arguing that the content stocks have possibly seen the worst of investors' fears. They did add that the group may see some consolidation among the players, which is a broadly positive view given the fact that the group is at pretty historically low valuations, and it's been under some considerable pressure for now some time, saying that this current risk-off market can provide compelling risk and reward opportunities.
Spades got there too, though.
To follow that, Netflix price is matching this upbeat enthusiasm
Not
from
too bad, I
analysts
guess.
today. And of the analysts covering Netflix, this name does skew 59% have buy or buy equal ratings.
Nice looking chart for today, but you know the chart on this name on a longer time frame, maybe not so positive relative to what this shape looks like, because I'm looking at a name that of course has had a wonderful second half of 2022 into 2023, but investors after the beginning of last year and now upwards of almost $100 off of the highs that we made earlier this year in the summertime. I wonder if they're thinking deja vu, here we go again. Is this stock, when it gets moving one way or another, it tends to move. Analyst positive, though. I think that's a welcome surprise here for the stock with the overall market turning around intraday. Both these shots
straight, doesn't he?
weighed in on Disney as well.
Three of a kind.
What were they saying about one of the key peers, I would say, to Netflix in this streaming world?
You know, so what was interesting
Just
is
straight
the
out there.
analyst was less enthusiastic
Playing like that
about
with
Netflix, more
trips.
enthusiastic about Disney, initiating coverage with an outperform
I guess I was playing like that with two
rating,
pair.
admitting that while Disney does have its challenges, it's the only credible challenger at this point to a name
You
like
lured
Netflix.
me
That's one
in.
reason they actually recommend buying the stock outright. The analyst did say that while they have a bearish view on the company's linear media business, they're optimistic about Disney's potential in streaming, especially if the company looks to buy the remaining portion of Hulu that it doesn't already own, that is still owned by Comcast, mind you. They do see an ample synergy potential for Disney if the company were to fully own Hulu alongside its Disney Plus and ESPN offerings. Additionally, this analyst is upbeat about its international opportunities specifically for Hulu, with some back-of-the-envelope math on the conservative end, since Hulu, they said, has a similar level of foreign content as, say, a Warner Brothers Discovery. The incremental revenue could be around $2 billion. But did note there's a ceiling that could be around $9 billion, depending on these bundling strategies as well as investor overall content here. So Disney, amazingly enough, because all we talk about is the fact that Disney's got to figure it out this year, 71% of the 31 analysts do rate it at a buy, or again, buy equal rating, and the average price target does imply about 28.5% upside. And Disney, quietly, all I was talking about was how we're seeing the losses sort of outpace the gains on the week. Disney's up over 1.5% now week to date, with today's nice move to the upside. So although we're still down 5% this year, they are at least attempting to close out this week in positive territory.
I had to like blink twice and look at this because this is the daily chart of this name, and it's like almost exactly the inverse of what this stock looks like on a year-to-date basis. But really nice day for Disney. You can see just building as the day is rolling on. So a positive thus far.
As the day falls on,
week for
and
Disney. So much of this conversation goes to what Disney themselves has said they're going to spend their money on, which is theme parks and experiences in person, away from screens. So we'll see if that pays off as we roll in to 2024. All right, time to shift gears. No clean transition here, but comparably, we had TD Cowen weigh in on the fintech world, particularly the payment services companies, Jenny, in PayPal and in Block, formerly known as Square. Let's start with PayPal.
So PayPal, okay, so the story gets a lot more negative from here regarding both of these names because TD Cowen did start coverage with a market perform rating and a $66 price target, saying that PayPal, while it is a leading fintech name with an unmatched global network, along with some of these leading consumer merchant products, they do now see ample uncertainty given its assertion that staying on top is just show me story dynamics that are limited to some of the upside in the near terms. They do not actually really believe in the narrative that PayPal has attempted to lay out to re-spark some enthusiasm. Now, PayPal is down 20% this year, and I do think it's important to zoom out. I know this isn't exactly fair because the argument is that valuations have been reset since pandemic peaks, but they're down 80% from their all-time high, which was $310 a share. So it's amazing to me that we do still see 63% of the analysts that cover this name have buy equal ratings. The average price target is $85 a share, which implies about 50% upside. It's just amazing to me that analysts see this name coming back.
You got to think about this stock in a lot of different ways. You can zoom out all you want, but the story just doesn't get that much better until you go a long, long ways away. I was just even looking, we got 3 years behind us. Even if you go 5 years, you're on your lows for those time frames. And that's disappointing for a stock that really was just a darling of the market for much of that pandemic period. It really did seem like it was positioned to disrupt the financial world. And maybe it still is. But at $57, I think there's other concerns at PayPal right now relative to, where do we go from here with this stock just seemingly making new low after new low. Price target at 66, though. I think 66 would be more welcome
believe
today
stock
than
can
it was maybe
break out of that.
ago. But investors got to take what
They just at the top of the channel.
That even happens. Last one, though, Block is another name, the same firm, weighed in on here, initiating coverage.
Look at that, still in it.
For a while, these two companies were nowhere near each other in the same
But I think we do have RSI divergence down there. We do, yeah.
They are, but I will say that
so if it doesn't do it today, it'll probably do it next week.
Of these four and by a sizable margin, it's down 31% this year. It's also down about 2% this week and off its all-time highs by 84%. But amazingly enough, this same TD Cowen analyst does actually see a better story for Block, actually starting coverage with an outperform rating, a $59 price target, noting that Block boasts a fundamentally differentiated ecosystem in fintech, given Cash App as well as Square. They see the company's ability to grow and integrate its solutions, placing it among the most likely to challenge the industry norms. They also added that recent pressure on shares has been overdone, and some of these negative revisions have already played out from here. And this name, second to Disney, has the highest buy rating ratio. 68% of analysts do still have a buy rating, and the average price target is $78, which implies, over 80% upside from here. So this is another name where the street, it's like, are you just being stubborn, or do the analysts see something that we don't see?
Well, I will say eerily similar to the chart on PayPal. You can see the 3-year chart, a lot of negativity brewing in this stock after what was really a really nice post-pandemic, during pandemic type of period where e-commerce was really a bright spot, but also I don't think it's even been mentioned. There was like a crypto boom during that time too, and these companies were positioned quite nicely for that space. I don't know what was more of an ill-timed name change, Square to Block or Facebook to Meta.
He folded.
Now, given the dynamics
I checked and he folded.
But again, the future may hold something completely different. I think investors would like to see this stock work its way back to pre-pandemic levels, which were twice this number, up in the 80s. Same with PayPal, up in the 120s pre-pandemic.
Good enough to
it's been
fold a high pair.
For these companies, for investors, need an upswing here soon. Otherwise, investors may be losing some patience and confidence.
Hey, but at least with Meta's name change, they got rid of FB and moved to Meta as far as their ticker, because this ticker mismatch makes me mad every single time we talk about this stock. It has a massive identity crisis to me. Are you trying to hang on to the Square identity, which maybe actually wouldn't be a bad thing? Like you said, it was a bit of a misstep, I'd say, as far as the ill timing of the crypto market with that name change. But we'll move away from some of these fintech names. We'll be looking at the streaming companies, Disney as well as Netflix. We'll be going over some example trades as well as some key technical levels to keep on our radar. Stick around. Next Gen Investing.
I forgot where I would take puts here. It's straight got there. I have the flush, I guess, anyways. 2 jack, 2 pair. That's a hard one to fold. Rallying up there. Hasn't made any signs that it's bearish yet. That's the thing. Just looks like liquidity being built. That said, we're at such highs. Could see a double top up here. But we've more or less been building liquidity and chopping for an hour and 15 minutes now. I'm happy to be out of. Still kind of early. It's only 1:15. Might get puts for a double top up here. Tempting. What's SPY doing, man? Ready to blow up? If we make a little head and shoulders up here, that'd be legit. Oh, let's see. Here we go. Holders. I guess SPY did kind of make a wedge there. Who played that breakout? That's hard though. I don't like the risk reward up here. Not for the upside. Downside much, very much. New high there. Ripping. Ooh. Look at that thing go. All this liquidity being built here. Looked like it was bullish here and then did that and
But now, again, looking at MACD, we're changing things up on this Friday. Rick, walk us through what you're seeing.
Well, we were talking about a potential crossover on our last one. This one, we're actually getting the crossover today. We're crossing over our faster line is crossing above our slower line here. But look at the bar graph. Look at how sluggish momentum has been for really months here. Kind of just languishing sideways, not really making a big improvement one way or the other here. And you can see what we'd really want would be a cross above this zero line, this purple line here. That would suggest that momentum is really starting to pick up. So the crossover of the two lines, that's a sign of improvement, but there's kind of another step that needs to happen still. That's what bulls would probably really want to see, coupled with a break in price above resistance.
They have a straight or not?
Sort of stuck in this limbo, not able to say it's really a bullish trend yet, which I think is fair. I mean, that chart clearly illustrates that. But now, as far as support and resistance, what are you watching? Disney, I will say, does not have earnings till the first week of November 8th. So we do have a little bit more time ahead to that earnings event.
Let's say we do keep going up here. The first area to watch right here, the 63-day EMA in orange, right on top of the upper line of our wedge type shape there, right around 84.65 or so. Beyond that, we'd want to break above those old lows, this red dashed line here that I mentioned, right around 85.30 or so. Rough area to watch there. To the downside, we'd want to hold that 21-day EMA today. That's an important
Same
mark
sort
to
of
hold
setup that
heading
happened
close,
yesterday with that
81.78 right now.
early morning when it had that
We've got our old lows to contend with. 78.73, a move beyond that level.
and that bigger
would
is
not
to the
be good for
downside
the
though.
bulls.
Yeah, I think really well put. And
Started
of
with the
course,
small-
These names have seen their fair share of selling. I think it's difficult to say that they're seeing
small
strength, even though obviously we're ending the week on a
bearish
lighter
liquidity
note for
grab, and then
Disney
it like
as well.
extended it
We'll leave it
bigger.
there. Great breakdown on our streaming stocks.
Larger
today.
one that
Rick
just
Ducon, our
happened
chart
today
master. So now, Alex, when trading
as
this
well.
name,
We had the smaller one earlier, and then
they look very different on a year-to-date chart.
what just happened just
Disney looks strong
just
this
took more
week,
liquidity for them to get
really
to
recoup
break
those
out
losses. So
again.
leaning into then a more neutral to bullish
Took
strategy
longer.
here.
Yeah,
And I
it was
guess
sort
the
of a
volume is
neutral
lower
bullish,
this middle of the day, so
name when it came to some of those
guess that makes
analyst
sense.
notes, the picture being
Take a little
somewhat
longer.
mixed on the technical front, and quite frankly, just because the stock's been trending downwards, investors may be not quite as convicted yet in this name. So looking at a neutral bullish strategy, as you mentioned, that
now we
first
should start
full
to see
week
some
in
signs of
November is where
tapering,
this
if there
earnings
is
event
tapering.
But the first week of November is the one prior. That's the one that we went to
Hard to
November
tell,
3rd.
man. This trend has
selling
been
the
so steep.
82.79 put vertical for $1. So sometimes, Jenny, give you kind of a look into the brain,
Sometimes,
to
Jenny.
the making of the sausage, if you will. Sometimes they.
What is he talking about,
investors
sausages?
may look at the technical levels. They may look at the chart or the fundamentals or the price targets to select strikes. Sometimes it's just a function of pricing. In this case, that was more the thought process in these strikes selecting. To get a 2-to-1 ratio or collecting a third the width of the strikes, well, these were the ones that did that. And so no real technicals to point to help you with the 82.79, but 82.79 you can collect $1. That was the thought process. So risk 200 to make 100. 81 is the break even. It's slightly below the share price, neutral to bullish, as long as it holds on to 82. Going into that first week in November 3rd, avoids that earnings announcement. Investor would be happy if this thing was above 82, as that'd be the most likely chance for you to collect that full credit, keep it, and move on. Risk all to the downside, $200 if it's below 79, and these options went through assignment and exercise.
And of course, risk defined, and this does not go through that earnings event, so we avoid some of that earnings premium naturally, but we will leave it there for this segment. Now, to shift gears here, coming up next, we are looking at all things Tesla for FOMO. Tesla, although lower on the day, it's recouped most of its session losses and now pacing to close out this week as another bright spot in these markets. We'll discuss more why coming up next.
Still might get the put play today. Gotta wait for the right setup. Folded. Come see the river.
Your thoughts on this jobs number? We sort of mentioned off the top of the show.
Yeah, I think the number initially was a shock, and the first shock was, oh, stronger employment is going to lead to Fed taking more action. That's going to lead to higher rates, so bonds sink. Initial reaction is that must be bad for the market. I think as we dig into this more, there's still some kind of holes in this narrative. I mean, one, it's backward looking. The strikes have really escalated, and as we look forward to October and November, I think there's still reasons to think that there could be a little bit shakier jobs data going forward. We don't need much of an uptick in unemployment to be, a full half a percentage point off the lows, which is typically an indication that recession is not far away, or it has been. And also the household survey only up 86,000 versus the 220-some thousand prior. Does still kind of highlight a weaker jobs market. So we'll see. I think there's a lot of positives to be taken away. The fact that Kevin laid out wages not really strong is certainly being seen as a positive, but that's also showing that maybe the jobs that are being taken are on the lower side of things in terms of wage. And of course, hospitality continues to be a major driver of these new jobs. But all things considered, I think that it is being read as a Goldilocks report thus far. We'll see what the rest of the year has to bring.
Okay, and so now to shift gears to Tesla, which I will say, so we're basically unchanged.
Teslas don't have gears.
Sort of amazing. This has been alongside the market's comeback here, now pretty much rallying on the session. But Tesla did announce further reducing some of its prices for their Model 3, their Model Y. And again, this has been
130, we're at 12 likes.
You have the camp of people that are
Thanks
saying,
for those thumbs ups.
The margins. But Elon Musk has been very transparent. He is so focused on volume over margin growth this year, Alex. So, I mean, interesting figures. We're seeing it more affordable for the consumer. We're definitely winners in that aspect, but not necessarily seen as a winning sign for Tesla, perhaps signaling that they have some demand issues. They have to keep lowering their prices.
It's hard to say with a company like Tesla. This has largely been a part of the plan, it seems like, since the inception and Elon Musk's involvement. This idea of start with the expensive car, make a slightly less expensive car, to make a more affordable car, to make a very affordable car. It seems like they're truly trying to implement that. But I also saw another explanation that I think provides an interesting thought, and also maybe deserves some merit, which is, are they attempting to sort of apply this sort of razor and blade type of
going all right.
The car itself
Let's
isn't
see, where are these ones
the
at right now? Actually, I haven't checked them.
The updates to the software, the full service driving.
So I had contracts
the battery and its applications
that went
elsewhere.
800%, but I closed them before they went 800%.
Very similar.
You gotta leave one there for your
iPhone
homies.
Seems to work now. Yeah, the
That
iPhone's
lesson I learned yesterday. It's quick to forget it today.
on you accessing that app store and the services after the
away
fact,
here. I don't know what I'm doing.
as much as they are about the device itself.
No kidding, and they definitely get me in that sense. But this does
Oh, I
come
had a straight.
after
I
they
didn't see
did
my
release
straight.
their third
Oops.
quarter deliveries, coming in around
But yeah, doing well.
495,000.
Green on the trading account, which is good. One trade on the secondary.
We talked about this earlier this week. We're saying almost like a non-selling event. Feels
Stupid
like
trade.
good news,
Waiting for the
given some
downside
of the
trade.
historical volatility
Waiting for the
we've seen
downside
after
trade.
their
So
delivery figures.
waiting for that to set
Also,
up.
we did get reports today the SEC is suing
But yeah, I bought these calls this morning at $1.84.
claiming he failed
Right
to
now they're
appear
worth
provide testimony last month when he was subpoenaed back in
$8.40.
May. That is an ongoing saga, and that
Well,
has
that
so much
stings a
more to do
little
with
bit, but
his
yes,
purchase of
green is
Twitter.
green,
I
so
don't
happy
even
with
really
that.
necessarily want to get into it, but what I did find
Problem is I was
when
using
looking
only a
at
few
all things
contracts was on my
SEC
trading
versus
account.
Elon Musk, is he did recently respond to the
And
social
so
media user
I
who
got
shared
to
a
my
graphic
first
that
take
was
profit.
comparing EV sales for the first half of this year.
It was only
And
taking
he
one
said
off,
basically
so then I didn't want to
responding
leave
to if he
just
should
one.
be the head of Tesla, saying
Yeah,
some say I
when
should
I'm
question
trading
why I
like
should
10
run
or
Tesla.
more
My
contracts, 5 or more
response is
contracts, it's
simply,
easy to
which
sell a
CEO on that
couple,
list would you
3,
prefer?
and
Responding
then
with
leave
this
1 or
graphic
2 to
that
go.
showcased their leading sales
Oh, it's
performance
half
in
my
the first 6
position.
months this year.
Hard.
Mind you, they've outsold its 19 closest competitors, including Ford, Rivian,
Oh.
Volkswagen, and BMW.
Yeah, but
they
no,
did
it's good.
achieve an impressive
Stoked. It's hard to see that.
325,000 vehicle sales, which the second best just to
We'll maybe
Tesla
make it
was
back on the
GM with
backside
around
of today.
35,000 electric vehicles sold, which just paints a picture of their dominance. I mean, 325,000 vehicles versus GM around 35,000. Incomparable, and I think that is why we're still. I mean,
Just
not
know
necessarily
better.
that's why, but
No, leave
just
one for your
speaks to
homies.
Tesla's dominance in this market. So often, I feel like the bears
Like,
start to echo, and we start to see
literally
things
was
pull back.
preaching
from
to myself
Tesla,
yesterday
but
about
the stock
that.
is still up 110% this year, and it's up. I mean, a decent amount, 4%.
Let your homies
this
stomp
week,
out the
Alex,
last
which
one.
is amazing considering some of the weakness and mass selling we've seen in GM and Ford. Obviously, they have somewhat of their own issues going on right now, but Tesla is appearing to emerge as the winner of these UAW strikes.
When it comes to these lawsuits and things, to me, this is equivalent to like the gossip tabloids that you see when you're checking out at a store. Like to me, that's like what it is in the financial markets. When it matters, the market will let us know because there'll be price movement. When it comes to Elon Musk and other leaders of these companies, many of those other leaders in the companies are not household names. So the fact that everyone knows who Elon Musk is goes to show some of the successes that he's had, and some of that comes with failures as well. And
all the hearts got there.
Pros and cons. Just life,
so who wins here? High card?
From a trading standpoint,
it's split no matter what.
Tesla seemingly is always to the upside, and so
You
I looked
folded?
at a bullish strategy in this name. Went out to the October.
I don't think I'm
going
going to be doing hold puts over the weekend. This, well, actually we didn't break out. Let's see. We probably won't close above the breakout. Oh, did I delete that? Dang it.
Slated to be reported, so very, very short term.
Yeah, I guess we kind of are above it.
Strategy to what we looked at in Netflix, just simply buying a call vertical in this name.
Went around deleting a bunch of lines. I deleted the wrong one.
Speculative, options spread.
We're slightly above it, but I don't know. I think we're due for a proper dead cat bounce, so I'm not going to be calling reversal. We just had the reversal. This is the beginning of the reversal back to the upside.
You know the drill. One in the money, one out of the
but
money.
not to say you can't
Get
a little pullback before we keep going.
That we use to structure these,
but it's like playing this move right here instead of this move, or playing this move instead of this move.
That was the
that's how I see it at this
for
point.
This strategy, the 255-260 in the October 13th cycle. If you spend 250 on this, you're going to
Mavis. I mean, I've looked at Mavis. That's like an OG.
Eerily similar to what we looked at in Netflix because it is essentially the same strategy.
Stock.
Right, and essentially, I mean, we're seeing.
I'm gonna watch this
I
actually.
keep waiting for Tesla now to slip into green territory because it's trying so hard, but still just slightly lower here on the session. They also, similar to Netflix, have earnings on October 18th. So it is a big day. Well, we do already have their delivery numbers. We will obviously be watching that event very closely, but that'll do it for our FOMO segment. Now, coming up next, we will look at some of these auto part retailers, specifically O'Reilly as well as AutoZone with Jeff Pierce.
All right, I'm gonna get some of those puts right now.
But shares are shaking that off. Both names higher.
I was on the 5 minute there. Here's the 1 minute. Like that little head and shoulders. I'll get more on a break of the shoulder or the neckline, which will be right here. Got a head and a shoulder. Build another shoulder over here. This being the neck. This is probably an RSI divergence too on this longer time frames. Yeah, there's RSI divergence in the 5 minute and the 10 minute. So just a starter position for now. Just dipping my toes.
consistent all year long, but we'll leave it there. Great breakdown. Jeff Pierce, the Senior Manager of Derivatives Trading for Charles Schwab. Now coming up next, we will talk all things snacks. We talked about this very heavily in yesterday's show.
10 minutes to
Alex
2.
We're revisiting Conagra today on a positive note, perhaps. Shares are up 1% on a mixed analyst note. We'll discuss that more with George Tillis coming up next.
Now we find out if we caught the top or another bulls building liquidity. Could still come up and even double top. Yeah, I'm not break size channel. It's not a. That's not going to stop because maybe I should, but late enough in the day now. I think we should get a move probably back to some safety. What's up, Jay? AMC's up 11. GME's holding up 2.5. Overstock 11.8. GNS 16.25. Look at that consolidation over VWAP. That's crazy. What I was looking for is this kind of tapering of sorts. It was hard to tell though because this channel to the upside was so aggressive. It's like I'd have to actually retest it one more time. Might, yeah. I'm gonna probably hold and then but it doesn't mean we're just gonna reverse. We could trade in this sideways range for a bit too. This being the low, this being the high. We're in here. So, patience now. Delicious coffee. Cup, 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 cup. I'll call that, heck yeah. Oh, everybody's calling? Everybody's in there? That RSI divergence give me more conviction on this being the top. So I'll probably hold. And if we get another test to top this channel, I'll actually probably add. If it breaks out of this channel, then that'll be my close, my stop loss. Yeah. Sounds like a plan. Okay, Bubba. I closed my puts earlier. Actually, closed one for profit and stopped out of the rest. And got... Did I get calls? I did get calls. I closed those two, though. This isn't as safe of a trade. I mean, really, confirmation will be breaking this level down here. This was just starter, very small. Too parafolded. Damn holds, can't day trade it. Okay. You could, if it's a margin account, you could leg into it, right? That's probably what I would do if you're up on it today, because you might not get a gap down on Monday, and you're giving up, actually Tuesday. Monday's closed. So you're giving up 3 days of theta. So if you do have a margin account, I would leg into it by end of day if you're up on it. That's just what I would do. Cash account. Then you can't do spreads. Yeah, all right. Picking up some more right here. Little head and shoulders forming again. Get a double top, I'll pick up some more. Get a move up here. Be my final pickup. It's all for good faith. I think you can only do one of those now. Get one to burn this count. I mean, yeah, if it's, you're probably not gonna be up a whole bunch today, so maybe it's probably not worth it. If you're up at all, I mean, we could close right up here too.
Today, we're going to talk all about that from red to green as yields on treasuries have come off the earlier highs. In the meantime, here's what's on the show.
Jeez.
Is now the right time?
Just fold it straight. Well, they raise 100K.
One of our guests actually think the current pullback that we've seen Volvo CEO will join us to take a closer look at the future of EV charging infrastructure. And throughout the show, we'll be reacting to that hot jobs report for the month of September. In the meantime, take a look at the markets. 2 hours left in the trading day. We're no longer having losing weeks. It looks like we might be able to squeeze out some gains on the major averages. I got to check them all week to date, but earlier in the day I was saying a fifth losing week, but not necessarily so. The S&P's up 51, that's 1.2%. The Nasdaq's up 1.5%. The Dow is up 300
All right, 2 hours.
points, and the Russell is up 1% right now as we speak. And week to date, the NASDAQ is up 1.6%, so a winning week for the NASDAQ. Here's a look at the dollar, down 105.83. Gold gaining 13.70. It's at 18.45 troy ounce. Oil 82.49 the barrel, and Bitcoin up 2%.
Sort of a little double top there.
Some of the biggest stories in the
Looking good. I'm going to add to the puts only on this break here.
Contributor on Schwab Network. All right, we're 3 weeks
Because I mean, we should have room to go.
Union
Maybe all the way down to
President
VWAP.
Sean Payne about to give an update on the progress. What are you watching, Kevin?
Thank you, Nicole. Yeah, you know, it's more of the same with the UAW strike. I think what you're going to see, I think there's an announcement from Sean Payne coming up right about now, right around 1 o'clock Central Time.
That's true. We do have some Fed speakers there, don't we?
He usually gives a pretty measured response. He puts more pressure on some firms, less on others, based on how the negotiations are going. But
Consumer credits at 3 o'clock. That shouldn't do anything.
All the events seem to be leading up to longer strike than we originally thought. I think GM made news this week, taking out a $6 billion line of credit. That implies that they're bunkering down for the long haul here, Nicole. I think you're going to see more pressure. Now, we don't know what's going on, what negotiations are going on behind the scenes. We won't know until we know, right? Till there's a major break. But right now, it looks like the pressure staying on. And frankly, the car dealers, the big three, GM, Ford, Stellantis, very quiet, Nicole.
Yeah, I see, by the way, you know, everything's turning into the green, so we've snapped it, but that Ford was down for so many days, down 8 of 9 days, down 6 consecutive days, the longest losing streak since September of 2022. There's even talk that maybe moving some manufacturing, not necessarily for one over the other company, but maybe manufacturing then, if they
just folded.
UAW, they move manufacturing out of the country. Over to
Trade better work.
or something. So I really hope that they find a happy medium, the automakers and the UAW. In the meantime, Tesla in the news. So the latest there.
Tesla cutting prices. Frankly, in my opinion, Nicole, putting more pressure on the big three automakers as they try to transition to electric cars. These lower prices, these cheaper models are putting more and more pressure on the profitability of the big three. Tesla did today. They cut the prices on the Model 3 and the Model Y vehicles in the U.S. The move could stimulate demand after their weaker than expected quarterly numbers. Remember, they delivered less cars than expected, but kept their end of the year targets intact. So I think, you know, Elon Musk, some people think it's because of lack of demand. Some people think it's because he's just putting more and more pressure on the big three automakers. But the prices of the Model Y, the long range was lowered to $48,490 from $50,490. The price of the Model Y, the performance car, was lowered to $52,490. So the prices of the Model 3, the rear-wheel drive, $38,009 from $40,240. So Elon Musk eking down prices, putting more and more pressure on the big three automakers. Nicole?
Yeah, it's unbelievable. And he actually said he thought that this standoff, that these automakers were marching straight into bankruptcy if they give in to some of the demands. So we will see. Kevin Hanks, thank you for all of that. Good to see you, Kevin. Have a great weekend. Thanks, Kevin.
Did I
All
fold?
right, now let's take a look at the bigger picture. Thomas Martin's with us, Senior Portfolio Manager of Globalt Investments.
Did I put this on turbo?
We all know the numbers from this
I
morning.
feel like it's faster.
Blowout September. September. Revisions for the prior months.
It's
Labor
faster.
participation rate.
I'm
looking
playing
good.
fast mode.
What do you take away? What does it mean for the economy? What does it mean for decision making from the Fed?
Well, these numbers were really terrific, and obviously, at first, the market was treating it like good news is bad news, and then they decided that good news was actually good news. You know, first of all, it favors the soft landing narrative, and if anything, it pushes out those expectations for a recession for those who had them, and so that's one thing there. But you'll note that even though interest rates have come off from their initial reaction, they're still higher and up near that highest level. And we seem to be transitioning, and these reports we got today are supportive of the fact that
I don't know why I didn't raise, but I don't know what I'm doing.
Inflation and
this is sped up. It's gotta be.
anymore that are moving rates at the margin.
A little
it's
timer
this
on
idea
there.
of getting a fair expected rate of return in perhaps a growth rate environment that's a little
lose?
higher than people were expecting.
A flush?
Right, and you know
Should've
what's
raised.
interesting
Oh my
is
gosh.
that we see these gains, and
Why
you know
did she
it
just
shows you what
lose?
a tight labor market there really is.
AMC,
Are there any
nice
other
bull
pieces
flag
of
up here.
economic data that have really jumped out at you and tell you something? For example, one guest today told me about when he saw the ISM manufacturing print go from contraction to expansion by 3 points. He said that could be an indicator how great things were. The housing market, we know, is still very volatile because of the high rates that we're seeing for mortgages. What stands out to you? Some economic pieces of data that jump out at you?
Well, all of these are mostly pointing in the same direction, which is a stronger economy and a softer landing. But most of them are coincident type indicators. They're not necessarily leading indicators. And the ones that are leading are really just what everybody knows, the rise in interest rates from 0 to almost 5% on the 10-year. Well, not from 0 but the 10-year, but at any rate, the rise in interest rates. And we know that the banks have been snugging credit, and the banks have to be careful. We know that the dollar has been strong, and more recently that the price of oil has gone up. All of these things tend to act with a lag, and individually, they can put pressure on the economy, on consumers, on businesses, and it just takes a while for them to take effect. And it's just hard to have patience watch these things come through. So for those who are expecting a recession or a significant downturn in the fourth quarter, it looks like that's being pushed out again to 2024. And what we're waiting to see is, does it really have an effect on the consumer and businesses, or has there been some sort of underlying, maybe cultural change that is supportive of demand
retest this high again?
That we're just going to have to wait and see.
Yeah. You know, as we see all these different prints and things that have been going on, even the turnaround in today's market, as you said, good news is good news or good news bad news, but right now good news seems to be good news and pushing off recession and all that. The VIX went up to 1993, has since pulled back. It's at 1745. As someone who manages portfolios, what's your advice to investors right now?
Well, the advice is to try and keep your idea on the long term. Try and keep your eyes on what your overall investment objectives are. Make sure that if you need money in the short term, that's in a safer place, in a liquid place. Nothing like liquidity when you actually need to take the money out, because there is a wide range of uncertainties, particularly going into 2024. So if you're going to invest money for the long term, make sure it's only that money that is there, not the money you're going to need in the next year for a down payment or for college or for something like that.
Straight.
Right,
Call.
understood. And
Dang
you know,
it.
when you talk about diversification, bonds versus equities versus emerging markets abroad, small caps, large caps, where would you be more overweight?
Well, we're still overweight in equities, and we're still overweight in large growth, and we think that that is the best positioning to have going forward. As interest rates have risen, we have added to bonds in the bond portfolio, and we believe that we are fairly close to, rates at a peak, at least in the interim. I mean, nobody knows what's going to happen with fiscal issues.
New high of the day there on SPY.
Going forward in the level of the debt. Certainly things are a lot different when rates are 5% now than when rates were 5% a long time ago. Debt levels were a lot lower and interest costs were a lot less. So there's a lot of issues out there that make things questionable for the future, but we're positive on the markets in general for now.
And just quickly, you mentioned large cap growth, some more into bonds. Tell me about energy. Is that an area you like or not necessarily? Quickly.
Well, we're more or less neutral on energy. The OPEC Plus has been wanting to control the supply and control the price. They like the price up here in the kind of in the 90s area. It's profitable for them.
2.5.
And we want to have essentially a market weight in energy companies at this point.
Thomas Martin at Globalt Investments. Thank you. All right,
11 RSI divergence there, helping confirm tapering. We don't hit the high of that. That's even more confirmation.
Find out why maybe now is the perfect time to buy a name like Alphabet. More on Schwab Network. We'll be right back.
Nothing is certain in the market. Designed to take your money.
I remember when I first started flying.
Those calls this morning where we went from $180 to $900 right now. Good signs, not even hit the top of the channel. All rolling over. Adding to my puts there. Not a great place to add. I'll just be retesting that, but we'll see. Push a straight into, yeah, just a straight. Yep. That. Dude's like taking all my chips, I think. They have 14.8 million. Ooh. It's bad I only get 1.8 million. Where'd all my chips go? That is neat. Oh boy. Put out after hours? I don't know if AMC will put out anything after hours. Taylor Swift coming to the theaters, oh, what, next week? And they broke their record on pre-sales of 100 million, which is... I think she had to use like a different system or like crash the system or something. Long term? Not necessarily. I think they go bankrupt. They've survived though, and they've actually fixed their balance sheet quite a bit. Given it's been at the expense of shareholders, but that's what GME did too. But no, yeah, I think they could go bankrupt at some point. I don't think cinemas are gonna go away. Not sure if it'll be AMC with the whole market share. Yeah, they do. They do have a lot of debt. What's up? Psych you up? Dang, you're showing up late. Thought that was a 2. Whoops. Uh-oh. Uh-oh. Oh, I got a 2 on the river. Woo. Groovy investors. Miriam Jizzle. Miriam and Jangles. Jiggles. Miriam and Jiggles. Miriam and Nichols. Jiggles. With Adam Aaron though, I don't know if they are going to be able to not go bankrupt. Albanian. Never been to Albania. Out of here. Yes, that is true. That and paying their CEO. Like I said, I don't know if they can not go bankrupt with Adam Aaron as the CEO. Montenegro. New high the day they're on SPY. See if it's making another little double top up here. Definitely getting weaker. Starting to roll over, I think. It takes time though, all that momentum. Just slow down and eventually reverse. Gotta build up all that liquidity. Grab some people. Trigger some stops.
Than it really has to.
Yeah, it looks like they're now, they've gotten offers for 23% wage increases, up from 9% at the beginning of the strike. We knew they had gone to around 20%. And a name like Stellantis now has just moved to the high point of the day. Quint, thanks for going through some of these names with me in this breaking news environment for you.
Picking up 5 more there.
Appreciate that. And your picks today as well. Quint Tatro of Joule Financial. Thank you always. Really appreciate it, Quint. Thanks.
Position is ballooning up pretty good here.
Charging with the CEO of Beam Global. We'll explain that, the company's recent acquisition, and the future of EV charging, what you need to know.
There's a new high on SPY. See if it hits the top of this channel. See if it breaks the channel. That'd be bad. Oh, volume. Hairy tool. Those contracts now. $900. Would have more than doubled my count if I just held those 2 calls. Gotta leave a runner. The beauty about leaving a runner is it keeps your FOMO at bay, and it takes your it relies less on you timing the market, which is very difficult. You have the opportunity. So thinking it's the end, trying to time it completely. Look at that. Busted through there. Oh. I broke the top of that channel. Did it. Wow. The melt up turned into a pull off the top, potentially. Eyes is actually squeezing now. Dang. Why it's good to wait for confirmation. I'll try and time the top. Let's see. $230, got an hour and a half left. Divergence still there. It is. Might be closing these puts on a pullback, we'll see. Could just be a little stop hunt, local off the top. And it's this far from VWAP, this far from the moving averages. I was not paying attention there. I just saw full house. I'm like, okay. Harry 2. I like Harry Tool. New high there on AMC, up 12.5. Good morning, all you hairy tools. Good thinking, psych you up. Yeah, let's see. Cut losses and jump back in potentially, or ride the storm. Spy can get out of control, especially with how much it's sold off. Bulls have a lot of fuel. They're looking bullish. Let's hit that runner. 937. Pretty. Let's see. Gave back. Not realized it yet, but I've given back a lot of yesterday's gains. I got too heavy into this as a starter position. The starter became a full position. Without confirmation. Back again. What's up, guts? Hey, Dink. New high there. What was I saying about 1% turning into 2%? Gotta get 10 jack to fold. Why do we just see 2 cards? What? I folded. I raised. Raised. What the heck? It's too laggy. It's like on turbo mode and laggy. Oh geez, SPY squeezing. That's ugly. Ugly. Look at that thing. Wow. House contracts are at 970, 980. There's my next line up there. Still have an hour and a half left. See if there's any profit takers today. UOP is so far gone right now. Had the same bullish liquidity grab. Similar, well, inverse. Sorry to hear that, Guts. I'm inversing myself right now. Terrific. My rules, listen to yourself. No, I mean, I was bullish on the day, but I just was trying to time the reversal too much. A little too much. %. Look at this. Considering just being happy with break even today, if I can get back there. Be happy with my profits on the trading account. New high there on SPY. Man, we proper squeeze. Well, we're gonna get volatility at the end of the day. guy have a straight? Need that Fugazi move to save me. Save me, Tom Cruise. That RSI still there. Not with this high. This one. Dang. Don't have a full house? Oh. What? Yeah, we all have a full house. Holy spy moly. Contracts are now 1,000. 1,000 per. Almost 1,000% on them too. Oh, we're completing the cup today. That's what it's going for at 432. Not even that high. Let's see. That higher cup. 431.80. That's what it's reaching for. I want to get there fast and come back down. Go. Do your job. I don't think we're going to get a close at VWAP or even any sort of moving average. This has been a 2.5% move from bottom to top, from pre-market to now. Gotta leave a runner for the homies. Gotta do it. Where'd I close that call? Was it here? No, not even. It was here. Both of them. Well, there's a lot of liquidity here for the right shoulder if it does come down. I think it probably wants that full cup though. 1.5%. Wild day. Had a squeeze like this in a while. Maybe little head and shoulders for me up here. Hour and 20 minutes. 15 minutes to power hour. I mean, bulls have been waiting for this for a while. I used to take profits when it's just going to keep ripping next week. Even got beyond green today. Head and shoulders has failed. It's consolidating. Dish isn't green. It's down 1 1/4. Run is up 6.3. Even space is up 4.8. This tide is raising all boats. Teledoc's even a little green. Close Monday, yeah. We'll ride today in AMC. My calls I'm still down on. Let's see. Yeah, I'm still down on my calls. Taking profits on those on the first pump. Jobs report was bearish. It's because technicals, algorithms. I don't know what it looks like. I mean, got a lot of signs at the bottom of the channel. Bottom of the Bollinger Band on the daily. RSI divergence yesterday started on the hourly. Ooh. I've already done this flush with him before. See if he calls this time. Called last time. Smart man. No, you look at pre-market. That's why today's such a big day. 2.5% bottom to top. Because that jobs report came out right here, 8:30. There was your reaction from it. We're down 1% right here. Now we're 1.5. The day's not over. I dare average some more. up to him. Everyone left it up to him to keep calling. $40,000%? I gotta see a screenshot of that. Can you send me a screenshot, CJ? I don't think, I've seen it. I've seen it from other people, but no one I knew. I know you're on Discord. Just put it in media. But Market loves Friday pizza parties. It makes so much sense now. People whistle at Happy Money? Yeah, it's tune. That's right, man. We mowed the lawn last night. We mow some more tonight. That's right, big lawn. Takes a couple days. I mean, I got calls this morning. I got dailies this morning, and they were up 900%. I guess they weren't out of the money, though. But 40,000% seems unrealistic. These $1.84s went to $9.82, or they were at 100 or $1 before, but these were what are these? 421 calls. So I suppose if I was out of the money, they would have done better, but I mean, Qs could move more too. I don't know. I want to see it. I want to see it because that's the kind of dollar gains you're talking about that get kind of insane, where just a few dollars becomes a lot of dollars. Come on, CJ. I don't see it. It's good for the economy. Let's all go buy stocks. Whee! Yes, it looks like a Head and Shoulders. No, I'm not averaging into it. I don't have a good handle on any sort of reversal today. We had tapering back here, and then it just totally got blown out again with that gnarly buying spree right there. Got full on bulls and bears wanting it to rally up. Bought it at 0.03 of a cent? What? You add an extra zero there? You paid a fraction of a penny? 30 cents? You paid 30 cents for the contract? No, that's not even 30, that's 3 cents. I mean 30 cents.
To compensate for high inflation, what do you think happens next? Are you worried about a recession?
Not in the imminent future. And I think, the Fed hasn't achieved anything yet because inflation's not quite yet its target. But I think we're on a solid path right now. We were off, in sort of the wilderness for a little bit there, but things are trending back in a good direction. And while we are seeing, nominal wage gains slow, at least on a year-over-year basis. We don't have the most recent data for inflation quite yet, but actually there is real wage growth. We are seeing most workers.
All right, Psycho, thanks for joining, man. Thanks for your thumbs up, buddy.
Which I think is a positive sign for the outlook.
Happy Columbus weekend to you.
In a way that would alleviate some cost push concerns about inflation.
Thank all of you for your thumbs up. We got 14 on this squeezy Friday.
Purchasing power.
Right, understood. And so as we take a look at the final thoughts
Enjoy that
here,
grass.
when you look at this, Cody,
We got BBBYQ up
what else are we
400%.
leaving at? I know you mentioned about looking across the pond or abroad. Where does that filter in here, in your thoughts?
Well, in my perspective, I think that the American consumer overall is probably more happily employed than they were, let's call it in 2020 for sure. But they have all of these satellite worries surrounding them. And if you talk to them and you actually look at consumer sentiment, you see the numbers are not great. They're worried about big issues like what's going to happen in Europe, what's going to happen with China, is the US dollar going to continue, can I even buy a house?
Minor
And
flesh
so,
wounds.
while we talk about the individual
That's merely a
numbers,
flesh
I
wound.
think we have to remember that the average consumer
Look at that
is
consolidation
really gonna focus
barcoding on GNS
basically two
at
things.
18%.
One, I want to have a roof over my head because that's where I spend
All
the
right,
most money.
SPY.
Two, I have to be able to afford gas. Then three,
Bears building liquidity. We're actually going to see some selling here.
work in this environment, is
Need
it
to pick
okay
up
that my
some
wages just
liquidity
keep
at
up
this
with
shoulder over
inflation?
here,
I think the answer for
and
a lot
then
of people these
keep
days
the
is
flush going down to VWAP.
All right, Cody Sanchez, Contrarian Thinking, Nick Bunker, Indeed Hiring Lab. Thank you both for being with me. And a market that has turned well into the green.
4 minutes to
S&P
power hour.
43.19. The Dow's up over 400 points. We'll keep it right here
We
on
need
Schwab Network.
some
Thanks for
profit
being with me. I'm
taking.
Nicole Petalides, Market on Close.
We need it. Don't want to go into a weekend. All those profits vulnerable. Vulnerable to China invading Taiwan. I mean, come on. Think about that. That could happen this weekend. Monday could be Black Monday. We had a lot of average down. Did a lot of averaging down on the Theta farm yesterday. Last 2 days. I just thought we're gonna see a proper bounce. Enough to even lift up some stupid stocks. About liquor. Is that a stupid one that's up? Yeah, 2.5%. That's nice. That thing, it's flat. It's the best looking liquor stock I've ever seen. Flat. Doesn't look bearish yet. I'm just saying it's not there. 2 minutes to power hour. Close up here would be insane. That candle. That gap fill will be on Monday. I don't have dailies I can hold through this. Helps. I just got it straight? What the heck? Crazy. Guts, thank you for the pizza party dono, man. We will do it in your honor. We will. Thank you, sir. Thank you for your generosity. I appreciate it. It's a Friday indeed. Get your carbs in. Who knows what Sparrow will bring. Ow, ow. What's up, Taryn? I hardly know her. See if we can get a little head and shoulders. Power hour, there it is. What's homeboy got to say? Late. Dude, it's looking like it wants to just not do a whole lot of retracing back to anywhere close to comfort. The safety of the market. Nobody wants to take profits.
Let's get nuts!
Let's get nuts. Thanks, Cats. Appreciate it, man. Happens too often on me. Okay. Alright, day's not over. There you go. Whoa. Volatility. Black Monday? Starting early? Again, I think we're filling that gap to the upside. Look at that volume. That's the biggest volume candle since this morning, or since, yeah, probably this morning. Crazy. Still isn't looking bearish. Might get a nice meltdown, but nothing crazy yet. Yep, Taryn. Market is always there to get ya. You had some bearish plays this morning. Nice, well done. Yeah, that's right. That was you, Taryn. I was calling that out this morning. Premium is down, what, like 2% at open? Not bad. I didn't have that sell off yesterday, even. Into close.
Months off of the lows for the year in terms of the yield. It has been led by the 10-year and the 2-year unable to keep pace. This is what we're testing right now, because this is a different type of higher yield environment than what we got last year.
We've got so much room to the downside right now.
And dragging up rates by hiking and hiking.
Don't know if we're gonna get it
over the head
today.
of economic tightening, but this time it's the market doing
Oh,
it.
Friday
Somewhat
profit taking. Let's
naturally
go.
in
Come on.
response to very
Remember what that jobs
compelling
report
and
was.
strong
Just
data
put that in your
here
head.
the US. So the curve is widening out
you
now,
go.
bear steepening.
Think about
it's
it.
almost been like
Black
an
Monday.
educational week. Hopefully you know
Black
all the
Monday.
different terms at this point. Bear steepening versus the bull steepening that usually happens that is very recessionary. This should be a better environment for stocks. So far, it's been tough to argue equities like higher yields of any form. But today, putting the possibility back on the table here that higher yields don't have to mean lower stocks. That's why it's an important
I saw
session,
multiple
because
videos,
the
YouTube
way it was
videos,
going this morning,
yesterday and today, calling for a Black Monday, and
instead we're seeing is a little
even
bit
a,
of slowing down in terms of the
market
rate
crash
change
today.
for the yield curve too. So even though yields are going up, you can see
Yeah,
over
we'll
the
see,
last couple
bud.
days, our pace has slowed down a little bit. This is a 10-day chart.
Solar
So
GM puts.
including the bond market's response, to employment data from earlier in the week, jobless claims, which were very good. And
Is GM getting a
strong,
pump from this?
And ISM services above 50 and still expanding there too.
I mean, you know how these bear market rallies or dead cat bounces can go. Probably they're aggressive.
And at least the yield curve is going.
It can be short-lived, but very aggressive.
Not recessionary, or at least
That GM's getting a nice push from it too.
Yield curve flattening does to signal recession. So, economically speaking, this is a pretty.
Depending on where we close, I think we could even get a gap up on Tuesday.
The trend here still is, in the short term, higher. In the long term, might start to come under debate. But I would be a little bit cautious before waving the all clear flag here for the dollar.
Yes, start to do some bearish building liquidity. Go.
Right. There's a lot of trading around that 103, 104 area. So perhaps the dollar's move to the upside here happened too quickly. Maybe the dollar pulls back a little bit if the Fed's not forced to hike, but we do need to keep watching it because the dollar has been very, very useful for traders. When it goes up, that's when things generally get dicey because it means there's some form of tightening either from the bond market alone with yields ripping or forced by the Fed. But as long as the odds of a Fed hike by the end of the year remain under 50%, which is where they are right now, about 40%,
bounce on that.
maybe the dollar upside here will be limited, and that should provide a little bit of relief. The other thing that's providing some relief.
Yeah, that is tapering. Okay. Yeah, I'll average into these.
Willing to buy risk assets and crude
we actually get a crossover there.
And commodities generally in the risk asset camp, you're not getting a big move for crude. We're up about 0.8% to $83, but because WTI slowed down its ascent this week,
so far it's not this one to bounce on
the
that.
Last couple days, that's working too for bulls. Just want to point out though that being happy with a better than expected economic outcome and trying to turn this into a big narrative about how the Fed
it's just so late in the day, it's sketchy.
Hike again, that maybe the higher for longer is overstated and let's pile back in. There's a difference between buying quality stocks, buying good stocks, and getting speculative. The quality ETF should be the one leading the way on days like today.
On that channel.
Around noon, you saw the market start to get a little bit extreme. You saw Bitcoin start rallying, gold moving to the upside, high beta stuff. If we start seeing Bitcoin move higher, that's probably telling us that we're getting a little bit over our skis in jubilation, because still, higher for longer is the environment that Bitcoin hates, and that generally speculative assets with no cash flow will probably hate in the long run.
No, I'm not getting these we can hold.
You still got a juicy yield here.
I've just been day trading SPY for the most part.
Should be chipping away at valuations. Let's bring in Kevin Hinks.
I have longer dated puts on a lot of the EVs and just overvalued hype stuff. Nothing short term. I mean, I guess somewhat short term.
And the odds of the hikes are still
I have.
below a coin flip.
They're out of the money though. They're pretty dumb.
You know, Oliver, if you trade
the bounce on that is crazy.
Enough, you see days like this, and there's a
Mama
reason
said I see
that
days
I
like this. I see days like this. My mama said.
Number one data point that we get in a month, because you get a snapshot of the U.S. economy, but you also get one of the four snapshots of inflation that we get every month, like PCE data, like CPI, like PPI. We get 4 looks at inflation. This is a big one. And remember, the Fed isn't fighting a strong U.S. economy. The Fed's fighting inflation. And so even though the shiny number that we got in terms of jobs and unemployment was big and oversized, and the revisions were enormous on the upside for the first time, it was still the wages data that was muted. And that, I thought at the time, was a number that the markets could eventually embrace, because the Fed's fighting inflation.
It's a long weekend too. Remember, Monday's closed, so
remember,
extra juicy for the theta farmers.
Raising rates, but the next
bad for the longs,
point
good for the shorts.
How long will rates stay
on the options
at these levels?
chain.
I think Jerome Powell has them restrictive enough. I think
this looks so bullish.
He feels is rolling downhill, and he doesn't
just see rejection up here, 430.80.
Now it's just a matter of how long he has to see it roll downhill. 2%'s the target. I think that this is going to get real interesting, but this is an epic day in the market, Oliver. It was. These are the days in the trading pit where you never wanted the day to end.
And Kevin, to that point here, I mean, rallying into the close with a lot of strength. Obviously, seems to bode well, but the numbers on wages still are positive, right? The numbers for inflation, of course, are still positive. And since we've got already elevated levels, the higher for longer is like becoming almost concrete in terms of consensus, where a couple months ago, people were still looking for cuts and stuff. I mean, there is still an element that should be negative valuations. I mean, do you agree if we are still, though, not going to cut? I mean, there's no way, right? I mean, you would have to have a huge bomb go off in the economy for the Fed to start cutting.
Well, we never say never, and we never say always.
Sure.
But without some event, some market-changing event, I cannot see a scenario where the Fed would start to reduce interest rates. Not without some event. Now, we're going to get more data. And wages, you know, remember,
Weeple's even telling me.
We discount the ADP a
National
lot,
Bank holiday.
but
Oh, it's just the
ADP
banks?
may have given us a little
I didn't even look
window
into it. I just assumed.
into the wages data. Why?
You see
Big
here.
companies, those over 500
On Monday, October 9th is National Bank Holiday in Service. Columbus Day, due to the banks can close all deposit withdrawals. Oh.
And it was medium companies like what? Like leisure and hospitality, right?
U.S. equity will be open. I'm sorry. Sorry, guys. It's open. You're right, Turn. Way to check, double check, fact check me.
Migrating to, maybe that's how
my bad. It looks like it is open on Monday.
Because, Oliver,
all right, yeah.
If you would have thought about it,
Good call.
you would have thought the jobs data would be coming in light and the wages data would come in hot if you had to pick one or the other, not the opposite. So I think that
added to those
number
puts.
Eventually, once it was consumed and digested by the markets, surprised the markets. That
It's so late in the day, gosh.
You know, if inflation's the job, if inflation what we're fighting, the inflation numbers in this payroll number were actually pretty muted. 0.2, if you annualize that over 12 months, that's a reasonable level of inflation, Oliver.
Well, this is where we really do test the higher for longer environment, right? Because as that
Still could
consensus
be
forms
bullish.
around it, there is a healthy debate on both sides, right? Because to your point, if inflation's not surging the way it was, that should be a welcome event, but it still is elevated, and unless the numbers go negative on some of those components, then we're gonna have to deal with the prices that have already lifted off. But hey, this is pretty much new because we haven't seen this in basically a generation of trading, rates normalizing, and that's where it gets fun here. I mean, a good big comeback today, but we still need to see how the speakers respond from the Fed, because this week we did get a few, like Nestor saying one more hike, and Kashkari basically saying a hike if nothing goes wrong, and absolutely no cuts.
Oh, we got us. I didn't even see this straight. Dang it.
Exactly. And things are going to get really interesting.
Thought I had an ace.
The next, bit of
Let's tell everyone Thanksgiving and Christmas. All right, cool. Thanks, Turn.
Next week, that'll be another really good look. We get PPI and CPI. For some
PPI.
reason, inverted this week. It's PPI first, then CPI. We're going to get more Fed talk on inflation, and how do they interpret the numbers we got today with stronger jobs and muted wages. I think that's going to see when they put their spin on it, the markets will react to that as well, Oliver.
All right. Good assessment this morning, Kev. Nice job putting us on the right track early on in session. Appreciate it, Mr. Hanks, host of Fast Market. Let's bring in Reese Williams, Chief Strategist at Spouting Rock Asset Management. Continue the conversation here with us this afternoon. Reese, good to have you. Appreciate you coming back to the Schwab Network.
Thanks so much for having me. I've been following on LinkedIn, and I find it very valuable. Everybody should.
Thank you. Appreciate that. Tell me what you think changed today. Should we be excited by this comeback move, or is the onus still on bulls after the last 2 months, really dating back to July at the highs to kind of prove that they're the ones in control?
Well, obviously the onus is on the bulls. This has been a very brutal 2 or 3 months. So I can't say that, well, let's have one day and let's have a big party. But I do think that people just got overly bearish and just overly cautious about how terrible things could be. And I think Kevin, pointed out well, you had very good wage numbers in terms of that coming down a bit, less than expectations, with a much bigger than expected employment gain. That's a really great outcome for the markets, and just no one was looking for good news.
Dude, look at this.
That's the perfect news, right? I mean, how do we even figure out kind of how to handle this? For a generation of traders, rates returning to normal is a totally new thing. And then for basically every trader going back to 1970, we've never really seen the bond market kind of do what it's doing in the style that it's doing.
Did it close
right
at the
now,
highs?
at a moment
Possible.
post-inversion when people thought everything was going to go immediately into recession. So, I mean, what playbook do we pull from here?
Well, if you want to get one positive potential historical analogy, you could go back to the early 90s when James Carville came out with the line, I want to come back as the bond market because it can scare everybody. And that really was it was the bond market that forced the federal government to do something about the
You need to see it break the downside of this channel.
Which
this
was getting a little
most
bit
likely
out of
just
control.
bulls
So
building
I do
more
think
liquidity.
that, if you want to take one positive from all of this, the 1990s was certainly an area where yields went up and stocks went up as well.
That's kind of the way we should be hoping for this to turn out, right? Is that we kind of clear off some of the valuation froth and things start to normalize. Where do you think we are in terms of describing the stock market as expensive or cheap? Everybody's got their own metric. When you look at it generally, do you think it favors better returns or worse than what we've come to expect over the last decade?
Well, I think it favors worse returns compared to the last decade, but this has been an unusually great decade. Doesn't mean it's negative returns over the next decade, though. And if you look at the overall market, yes, we all talk about the Magnificent Seven, which has tilted the market PE pretty, to the high. It's probably like 18 now or so. But if you take away, those 7 or 8 stocks, it's more like 15, 16. So I don't think the market's too expensive. I think the market's fair. I think you have had a lot of fear over the last couple of months. And some things have really gotten overdone. I mean, look what's happened to, and I'm not going to mention individual names, but anything that is connected to packaged food because of the weight loss drugs. I mean, these stocks have been just demolished, and it's very unclear that their entire market's going to go away, and no one's going to eat another potato chip again.
Yeah, it's pretty crazy. We're talking about that this week. They're like pricing Pepsi and Coke like they're going out of business. It's pretty nuts.
Exactly. We just had a data point from Constellation Brands, and people are still drinking beer. Last time I checked.
Exactly. Okay, so what do we look for next year?
Quads?
Because last year was like bonds and stocks both getting hammered.
Yeah, some must take longer. That's what I was reading
pretty
about
hard,
Webull.
to not lose money
Some
unless
must
you
take
were in,
longer and you
like,
can't
super
withdraw or
defensive.
deposit.
Some of those staples actually did work.
Fast.
Then this year, to your point, so
But
far the
markets
last
are open, so
the 9 months of the rally was like,
Whatever.
okay, if you're in AI or tech, you're
This-
happy.
this
if not,
is
you're
still bullish. It's
So
freaking-
what are we looking for to try and figure out the next regime?
Well, I think you pointed out, it's worse than so-so. Bonds are down and stocks are down if you take away AI and tech for this year.
Yeah,
so
that's true.
I'm expecting a fourth quarter rally because I think everybody's very bared up. I think I saw something from Goldman Sachs Prime Broker that hedge funds are at like 2% of their normal net long exposure. So that suggests that people are super cautious, and who obviously there's so many things to worry about. Who can avoid being cautious right now? Seasonally, this is typically a very strong period, and getting back to some of these mega cap techs. They benefit from, high interest rates because they can reinvest their cash balances at high rates. They're not going to the market for money. They don't need to borrow any money, and they generate cash every day. So I think the stay strong with these mega cap techs. If there is a fourth quarter rally, they will certainly participate. And if we roll back over, they probably outperform.
Okay, so that's a really important point because one of the things I'm wondering here is that if we will see a more kind of cyclical value shift, sounds to me like you're saying that's probably not going to happen. It's either going to be tech winning with beta to the upside or bust and the other stuff gets hit even worse.
I think that's the safest trade. I think if you think interest rates are going to come down, I mean, this is the long rates. Obviously, the Fed's not cutting rates.
Yep.
We know that for sure. But if long rates do start to come down, I think the broader market could start to get a bid. I mean, there has been just a demolition in things like REITs and utilities and things like that are interest rate sensitive. So I think that could be the surprise. But it's a bit of a leap of faith. So I think the safest trade is to stay with mega cap tech.
Yeah, it's an interesting thought. Basically, rates come down, get a little help of the economy, not tightening, and then all the stuff that's kind of gotten beat up. Because to your point, equal weight, cyclical stuff. The further you get away from the AI trade, the worse it gets. I think that's an important point to bring home for us and remind us here of. Reese, great combo. Thanks a lot.
Thanks for having me.
Absolutely.
Enjoyed it.
Appreciate the compliments as well in the writing. Reese Williams, Spouting Rock Asset Management. All right, good take here. And we now have a nice setup to talk some stock picks. So Reese taking it from the macro into the micro for us. Our next guest has some companies on the mind. Hey, stocks are up. We're shrugging off a sell-off in bonds. Dollars red. So let's move from the macro and look at some stuff to buy.
$40 minutes to close. I just melting down here. Not very bearish at all yet. It just looks like more liquidity for bulls. Confirmed. More confirmed on the break of this channel. A lot of my puts there. Not enough stocks for people to buy. It was crazy. She had the queen? Oh my gosh. This guy? Quads? I mean, I thought with his first bet he might have had it, but then when I saw a second one come out, like, no. And I saw a third one, like, he has a full house with me. Got to. Can't believe he had a queen. That's the second quads we've seen. Crazy. This rally really was, this was crazy. This rip this morning. Gotta really check yourself when that's going on if you don't have a position. That FOMO just starts boiling. Mine was boiling a bit. Didn't come out until here, trying to start calling the reversal. FOMO check yourself. I get delayed FOMO moves. FOMO boils. Spools up. Alright, 30 minutes, let's see it. I was getting a little more jumpy here. Oh. Dang. Yeah, it looked like bulls building liquidity, but this late in the day too, it's hard to tell. They just I'll go slapping it around. Market makers balancing stuff. I don't know. Well, okay. Down on the day, but definitely not a blown up account. Runner for the homies. My lesson for next week. I didn't apply it today. That one runner could have saved my whole other secondary account. Trying to call the reversal. $3.30. Well, all right then.
Different policies and government interventions and mortgage rates, that ratio of home prices to income keeps rising. And so, regrettably or not, for a lot of Americans, the solution is manufactured housing and mobile parks and marinas where people effectively live on boats. Sun
cool.
Communities is one of two companies in the space, the other one being Equity Lifestyle Properties, that dominates this space. And it's a very long-term play, same theory in terms of interest rate impact as the previous company.
All right, well, for being sort of a housing alternative, it's done distinctly worse than the home builders. So maybe there's a gap to be closed there between the two kind of related subjects. A super interesting one. I want to make sure to get to two more because we're kind of moving up the recognizability spectrum here.
I closed.
Northrop real fast. Pulled
I
back,
closed my last calls.
Slammed as
Just
hard as
looked.
RTX and some of the others in the space.
Right
But generally, the market pulled pretty hard back from these
Oh,
defense
it's right here.
companies. Give me
Right
a
here.
60-second pitch for Northrop.
Sure. Northrop did really well last year, kind of on the backs of the
that
unexpected
whole big
spending in
move.
the military for the Ukraine war. It was up over
Crazy.
40% last year, and this year is a little bit out of style, out of fashion. It's down over 20%. But it's a great business. It's highly consolidated. There's really just 5 prime defense contractors, and even that doesn't speak to how consolidated the industry is. For example, last year, Northrop won the contract to redesign the intercontinental ballistic missile program for the U.S. Air Force, and they were the sole bidder. So that speaks to how consolidated the market is. It's a company that's going to be around for a very long time. It's largely dependent on
I averaged even heavier here. Maybe could have gotten out, but
depends
it
how
should
you
have
look
been
at it.
more of a
It's a slow
too
grower, but that growth
too heavy of an
translates
average that I'd be
into very
comfortable with
meaningful
without confirmation. It was
returns to
just
shareholders,
kind
and it's
of
currently
gambling
out
a
of
bit.
style, and I think it can do really well going forward.
Okay, all right. Literally today catching itself after making a fresh 52-week low, but turning around. Last one here, the most fun, I think. Let's talk Disney for a sec, Lucas, because this thing is like can't do any right for months. I was saying the last
Initial
week, though,
candle.
all the money that they're putting back.
Oh
into the
yeah, I
parks,
mean you had a
it
big
does
break
seem like
of
the kind
some
thing
moving
we
averages
should
down
be
here.
rooting for here because it
This
seems
little
like
liquidated
maybe it's
build
a
right
better
here.
use than lighting money on fire with
Right
the
here.
garbage streaming offerings in the Star Wars
This is when it
space.
really turned on.
Hit me.
Yeah, Disney
volume.
is a company we've avoided
Talking
for
about jobs?
a very long
Oh yeah.
time, and we
You always get that
continue
huge
to
volume
avoid
though
it,
on something like that.
It's a business
Especially
that
like
has
when
a
it's that
number of
that far out of
businesses really within
expectations.
it. It has
I feel like that's
the
abnormal.
media networks business, which really is ESPN, and that's a fantastic business, which just prints money. Unfortunately for them, it's a business that's shrinking. It's a business that's going down every year because the number of subscribers keeps going down, while the sports content owners continue to ask for more money. So
If you just look at the chart, I would say it's a good time to buy.
This is the one you're very
So.
bearish on.
I am so bearish.
More
I
so
don't
than
know,
sell.
if there could be a negative price
But
target,
I wasn't coming into the market with that
rough
sentiment,
for Disney, especially the ESPN
letting it
effect?
play out. But yeah,
I think
that's why I got called. So
ESPN is a melting ice cube. I think the
sold them too
parks
early.
and
Got them
entertainment
right here on this
business
break.
is a very
Right,
capital
break a
intensive
VWAP, break this
and
down our
very
channel.
cyclical business. It's the first thing that's going to get cut
Breaking
in a
the
family
bulls
budget if
building
we enter
liquidity,
a
which
recession.
they did all day long.
And as you see yourself, it's very capital intensive. You have to spend a lot of money on these parks.
Sure.
The movie studios are mediocre at best.
Something I got to work
and then
on.
you have a great business in ESPN, which is shrinking.
Reversals.
And they really haven't figured out how
Too
to
soon, Junior.
do anything in the streaming world and compete effectively against Netflix. And the capital allocation, finally, in this business is also, leaving a lot to be desired, to be quite frank. If you remember the acquisition they did with Fox, that was supposed to be they're acquiring all this content for over $70 billion. And supposedly they would acquire this content. And if they acquired all this content for $70 billion, why do they need to spend $20 billion a year plus, or even $30 billion a year plus on new content for Disney Plus?
Wow. That's pretty compelling stuff. And I got to say, even I'm kind of rethinking my argument for the parks in the middle of the convo, too, because a lot of that, too, they were able to jack up prices during inflation and get away with it. So if things slow down,
Never came back.
they lose the traffic. They might have to drop the
Yeah,
prices,
I mean, that's
too, because they've been really
didn't need to, because all the liquidity been built for these last days and days and days.
On the stocks.
They didn't need to
Appreciate it.
pull back and build more. Right?
Thank you.
Absolutely.
Like,
all right, there you go.
had all this liquidity yesterday in this whole range. And here it was all very controlled. In this
we went through a lot of
selling
stocks
channel,
7 minutes. Told you we were
which is
coming in
bullish.
hot. 3 more trades when we come back in the options corner. Rick Ducat has been poking around and found some interesting stuff for
So
us.
each new level,
Still
they're just
hasn't
grab
come big
liquidity and
today
keep
is
rallying.
Kroger, but someone's trying to buy the dip in options.
So it's not like a
sector trade in tech.
the reversal
as
rallies.
well
That's why
as
they're so aggressive.
big move in energy stock. We'll be right back.
Dead cat bounces, bear market rallies, whatever you want to call them.
I remember when I first started flying.
It's different than like when you're in an uptrend already. Then you have, natural rallies and pullbacks and higher lows, higher highs, and you have this upward wave. Got end of day chop, volatility, got 10 minutes of Fugazi, 5-minute finger slap. Friday rallies? Yeah, that's true. I feel like that ended a little bit ago, but yeah. This isn't even an OPEC. I mean, it's a weekly, but it's not even a monthly or anything. They just get us straight on the turn. If you bluff me out of this, well done. Well done, sir. Rockets fly. I haven't been paying attention, so I have no idea how to play these guys. I didn't bet as big on the turn, just trying to string these guys along. So you may have read that as weakness and then went for the bluff, which $10.
Wow, couldn't talk there for a second. And you know, this trade can absorb about 2.25% to the
I
upside
can imagine these
before it
moves
starts
too.
to lose money. And we don't
You've
know
been
exactly
in the
what
selling
the
channel for so
situation is
long.
for this trader. It could be a covered call. You know, it could be that they
Bears
own
are making
shares of
more
the
and more. You know,
ETF,
they're
and they're just looking to
getting more and
generate some
more
premium, or
profitable.
perhaps sell at a profit here. If it's not, though, you know, selling
It's
naked
coming
calls
down.
is one of the riskiest plays
Bulls
you can make because the potential for
are just
losses
waiting
is unlimited
the trigger
because the
to
you
go
know the
long.
product could keep just going up, Oliver.
Once it
All right, so
happens,
this is a pretty fun trade. Basically, someone's saying take your rally.
Bulls
and
and
stuff
Bears
it.
want to go up because Bears have been taking profit.
Pretty much, and it's
Taking
looking
profit,
that,
taking profit,
look,
taking
we're not
profit.
gonna get too far
Bulls have been
above
building
where
up,
we
building
are
up.
now, is what this trader thinks
So
here. Kind of,
this is where you have a combination of
not
both of
really
them wanting to go
making
up.
our way
Bears want to
beyond
go up
those
so they can get a higher
peaks,
price to short it.
From a brief uptrend in mid-September or so,
Just get
around
these
that
fat
level here.
rallies.
So, yeah, not much room to run to the upside is what this person thinks here. Kind of fits with the overall theme of slowing momentum.
That's kind of why I'm thinking also that this is unlikely to be like a covered call situation where they're, you know, because would you sell it $2.50 away? Like,
Got some
that's
10-10
not
calls?
really, the move you
10-10.
make
What day
if
is
you
that?
own the shares and
Tuesday?
just trying to hedge or something.
Monday's actually
I mean,
open.
like, that's a pretty close strike to if you're just trying to
I was
get a
wrong.
premium.
It is
10
quite
puts.
close.
No, I
but
think
mean,
I
it
think
depends.
I don't
If you
think the
choose
rally's
too
over.
far away,
I don't know what's
you
gonna happen on
get
Monday,
very
but
premium then. So you know, it's hard to say. It'd be
yeah.
interesting to know what
This
some of
this
these traders
this isn't
were
this
really
kind of
thinking
volume,
here.
this kind of
The
move.
best we can
That's
do
not
is
going to
just
be
try
a
to
one-day
use what
thing.
we know and think of possible ideas.
I guess it doesn't really matter either because if you own the shares and you're
I think this
selling
gap will definitely get
strikes
filled.
$2 away, then that
When we
means
broke
that
out of this
you
channel,
are
like we
pretty
broke a lot
worried
of stuff
about
here.
Things pulling back here. Okay.
Yeah, exactly.
All right, let's talk.
This will take.
Bullish trades.
It's just getting started, I think.
AR crude oil did.
Now it's just a question: where does it slow down? Do we break levels to make it back to all-time highs? Like, how crazy are we talking here? Got Santa rally potentially.
Well, it's hard to say.
Election.
Once again, you know, I don't know the answer to that for sure.
Extra time for funsies.
That I don't know.
One extra day because the market's scary.
On the shows at all here, but the trade was very interesting because
you get an exit,
at the
sure.
time I looked at it earlier this morning, it was like almost 90% of the market that it made up here. Someone bought 7,799 November 17th, 29 strike calls at a 46-cent debit. So a long call trade, unlimited potential upside, expiring in a little over a month, and you know, total risk of about $358,000 or so. And this is the kind of thing that I think is really interesting because, you know, it's kind of like insider buying. You know, you look for insider buying because it means someone has big faith in what's going on at the company. And I'm not trying to say any, you know, illegal or anything, not saying, you know, insider buying in that way, just, you know, like legal insider buying. Much more interesting than insider selling.
Corporate
people sell just because. Yes, exactly right. You know, insider selling could just be perhaps they need some money or something, but insider buying and this type of trade too suggests big conviction on the part of the trader. And it was very large relative to the options market.
I might break the highs
here.
here.
At the
See,
time I calculated it earlier today.
clear break of this channel. Retested it.
More than half the
Found support.
And the market was
just
also
chop.
87%
End
call.
of day.
So much more interest on that side of.
Wonder if Fugazi will be crazy.
Okay. All right, so pretty bullish trade here, looking for some sustained action for another $3.50 after a 5% pop today. Okay, nice find here for us, a little overlooked energy play. Last one he got, still red on the day. Kroger, Rick, down, can't catch a bid, market's up. That's kind of rough.
Yeah, and this is the one that is the biggest size and as well as being quite large relative to its overall market here. And it's been a rough day for consumer staple stocks, which is kind of interesting here. Last time I checked, they were down about 0.5%. They were the only sector in the red here. And Kroger was actually doing even worse than its broader sector here. We're breaking through the old lows from June. A lot of media reports are saying it's from recent comments from Walmart's CEO saying weight loss drugs like Ozempic could impact sales. My take on that is a little skepticism here, because Ozempic costs more than $900 a month. I kind of wonder about that a little bit, but you can see on the chart there that we filled the gap today on Kroger from all the way back there about 6 months or so ago. We are recovering a bit above that level, but it's not looking great for this company today. But one trader thought that perhaps a very long-term view on this company is quite bullish here. So it was actually two trades, plus 3,000 January 16th, 2026 year 60 strike calls at a 297 debit, and also plus 5,000 January 16th, 2026 70 strike calls at a 160 debit. The trades happened at exactly the same time. Probably the same person, given that they both are focusing on this far out strike price or calendar date here, and 833 days till we expire on this one here.
Wow.
So unlimited max profit, total risk for. Yeah, exactly. A leap. Exactly right. So basically looking to do stock replacement. So you get a similar exposure to the equivalent number of shares at a much lower amount of money. But, the risk is that you don't reach your strike prices on the options here. And these are quite optimistic here. It'd be about 38% to the upside to get to 60, about 61% to get to 70. And, the all-time highs in this company are only 62.78. So they're really looking for a big move. And, it was roughly 45% of that total options market in this name at the time, too.
Wow. Okay. So someone's taking up a big chunk of the options market, big bullish trade, long time to get there, and you got to hit the strike or else you just, everything you paid up for this thing goes bye-bye. So interesting find there, a little dip buying action in Kroger. Thanks, Richard Ducat. You the man. When we come back, let's talk some commodities, and then we'll get an update on the car strikes. UAW president had some stuff to say that sounded a little bit more positive than the last stuff they had to say.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Fuzzy. Alright, I saw a girl instantly rejected. Just turned around and walked away fast. Rejected by a guy? Pretty funny. Review the trades. Yeah, I'll do it quickly. I literally just talked about what I did today before I did it and said don't do it, and I did it. Here we go. I'm gonna close that down. Yeah, not a whole lot honestly. So okay, 10:22. I waited a while to open up any plays this morning, which was good. Very proud of that. Very choppy and just kind of finally started to see it. I erased everything, but had this little downward channel, which again is bulls most likely building liquidity. So once it breaks, that's when you have your confirmation. And so that's what I bought calls somewhere around here. Let's see, 10:22 bought 2 calls. Right here actually. Well, actually it's on Webull, so I don't know. I think it was here. On the break, got 2 calls on the trading account. That's 421 calls for today. This was at 421. So at the money dailies, got 2 of them for $1.84. And sold 1. Again, this is Friday. I've had a good past couple days. Don't want to squander it away on Friday. Even though I did squander quite a bit, fortunately. Sold 1 at 10:28. So right up here is a little consolidation. High of the day. The problem is I only had 2. This is again the small account. So selling 1, no, I only have half. So I want to leave 1 for a runner, but 1 is only half the position, is a whole half position. So then 10:52, so it broke the high of the day. 10:52. Sold it right here. Sold the second call right here. Head and shoulders. I actually left as a runner for a while, and then I'm like, you know what, I'm gonna sell it. Just want to lock in profits on the Friday. It's gonna be nice. Given this was so early, figured I could be disciplined and not overtrade or make bad trades. Which ended up working out, but anyway, sold it here. Sold that one for 220, no, 310. And that call is now worth, right now it's worth $9. So 3x from right here, and it actually 10x from down here. Is it 10x? 1000%? Yeah. So gotta leave a runner for the homies. Sold 1 there, and then still trying to read what was going on here. This, I was a little thrown off with how aggressive this was. Didn't chart this fast enough to see this breakout. Broke out. I'm like, okay. Let's see, 10:04, got puts, broke out of there, broke out of here. Like, this was an insane move. I missed the whole thing. That was when I started already trying to pull reversal. But I thought this could be bulls building liquidity once more, even though this didn't look familiar. It wasn't like this flag or this thing. It was different looking. At any rate, got some puts there. See right there. 2 of them sold. Sorry, wait, what did I do? Yeah, bought 2 puts there. Oh, and then bought 2 calls at 10:08. This shows you how, yeah, right here. Because I'm like, well, this could be bulls building liquidity. I'll just get some calls also. Yeah, so I tell I should not have been in a trade. Should not have been in that trade. Sold the 2 calls at 12:11. That's true. I forgot I had those calls I sold also. Sold those here. I'm like, all right, it's breaking down. I'll just stick with the puts. Then sold 1 put at 12:23. So made profit. I mean, made profit on that put. And the second one, 12:40. Yeah, once this thing started to kind of break to the upside. That said, it was just kind of chopping around. I didn't know what I was going to do. If I was a little more focused, maybe I could have seen what was going on here. It was already so high. That's why I was like, I was looking out for reversal more than anything. Given this top of the day, like, you could have gotten calls somewhere in here and here, like this little channel break. This wasn't great moves though, really. It was pretty choppy, more or less. This was the move right here. Boom, boom, or boom, boom, boom. So 5 minutes Fugazi. Went back down to that channel. Could have held the puts, but you never know. Okay. So close those puts out, and then that trading account was done. So I was up on the day, 20% on that account. And then comes the backup account. Back it up. That little M pattern. Who was talking about the M pattern the other day? I'm like, it's a M. It actually works out pretty consistently, I think. Let me pull up the secondary account. And I'm like, well, this move's been up, such a big move up. Maybe I'll be able to catch it on the downside. Felt pretty patient, but I wasn't that patient. Turns out there really was never even a good entry for puts here. Like, there really wasn't. Maybe this M right here, honestly, in the last couple of minutes. But this is so late in the day, it's sketchy. These were all channels for bulls. So I started with calls. Didn't even realize that. Bought 5 calls on the backup. So I wasn't totally worthless today. I was able to accept that we weren't coming down and calls were maybe the way. 5 calls at 12:43. Right here. I had a channel. Oh yeah, that's right. Right, so I was still focused. I was still in the game. My head was still in the game at this point. I thought this isn't a good trade, but I just took it anyways just in case. 12:43, break on this channel. Wait, 12:43. I don't know quite where I had it, but that was part of my problem. I didn't have a channel like this. I had it. I think I had it on the downside. I had it here, maybe. Is this what I was doing? No, why did I get that? I was just in. I got really late. It was very late to enter that. Because if you're looking, I mean, if you're looking here, like this candle would have been. I thought that's where I entered it actually. 12:43, which is really like right here. Okay, I was late, and that kind of shook me out a little bit. So I had 5 calls there, which still would have been a good trade. Like, I mean, that was another entry. Missed the steep part. That was another sign of it reversing. Very steep buying, and then it got less steep, so that's a good sign of it reversing. But we just ran out of room today because it's starting to roll over here, but market's about to close. So maybe this will pick back up on Monday, but we'll see. Sold 1 contract, sold 1 call at 12:46. I forgot I got calls in this account. So sold 1 up here. Nice sell, I like it. And then put a stop on the rest, which is a great trading strategy, and I'm very happy I did it. And it would have worked much better. It probably still would have gotten stopped out even if I bought it sooner. But with where I bought it, those stopped out. 12:48, they stopped out right up here. Yeah, they stopped out right here. So I was out of those calls. Then I'm trying to be patient, and I'm looking at puts. That was a small win because only 1 contract I'd take profit on. It was a small move, so unfortunately not a lot there. Didn't have a lot of cushion on the secondary account. 5 puts, or these are from Monday because it's on the backup. 141. So, yep. Head and shoulders. Still in this buying channel. 141, bought 5. Averaged down slightly. They were slightly cheaper at 158. Yep, bought 5 more. Yep. If I continued the average game, I maybe could have. Well, if I held until close. Oh no. Yeah, I didn't want to mess with this. It broke the channel the upside. I closed them here. That's fine. Bought 5 more at 214. So this is where it's just kind of slippery slope in a sense. This was somewhat of a double top. I did have a break. This was the channel break right here, I think. Yeah, because I had it like a tapering highs, and then it broke, and I was planning on closing them there. I'm like, you know what, I'm just gonna leave them, which probably was a bad idea. I think I would have been better off closing them here. Didn't close them there. Bought more, 225. So yeah, averaging again right here. thinking that we're still, this was the high before that, and then it broke out. I'm like, oh no, then averaging more at a 311. I was saying I was getting a lot. So up here, at least now we're on the backside of it. Right here, got 5 more. And then sold them all at 324. Right here on that break. So I could have held them longer, but again, end of day chop, uncertainty for sure. Yeah, there's the bell. SPY's up 1%. Didn't make it to VWAP, didn't even make it to any moving averages. This might continue into Monday a bit, given that yeah, it was starting to and then kind of stopped. And that was my trade. So down on the day, gave back some gains from the week. It's funny how it worked out, because this week I've been losing on my trading account and winning on the secondary, and then today I was profitable on the trading and lost on the secondary. So it's okay. SPY's up 1.18%. I think we should probably continue to rally next week and potentially do a little Santy rally. RSI divergence is playing out. Didn't quite hit the 200, which is fine. Didn't need to. Broke up above this channel, held above it. Quite bullish. Everything pretty much ripped with it. AMC's up. AMC was doing well actually before the SPY even started going crazy. But yeah, AMC's up 11.5. 9.25 over the $9 mark. Very good looking. Very nice. Nice volume today too. This is nice breakout on AMC. GME up 2.5. You know, really just doing its best not to rally too much, but hard to when the market is frothing. Yeah, I think this one could probably, GME probably 1540 resistance, SPY gaps and goes crazy. Still, this could be resistance. Might pump up a little bit more through here. I'm not expecting it to break these resistances and go crazy anytime soon. But it could. There is an RSI divergence here, which is bullish. So that's the first sign of this reversal that, whoops, that's a parallel. That's the first sign of this reversal that we're getting. Lower lows, higher lows. Here and here. So, but yeah, still need to break the resistance for it to be. We need a bit more than a bear market rally or dead cat bounce. Yeah, hope you guys had a good week. October 6th. Thank you guys for your support. Pizza Party Friday. Thank you, Guts, for the dono. Appreciate it, man. Thank you guys again for yesterday, all your generosity. Fun hanging out this week. You guys did all right. Had some good days. It's so funny. This big, huge green day, you think, oh, you can make so much money this day. And this was a 2.5% move overall. But for whatever reason, I did better on these days. Just the way it is, I guess. Yeah. So, sub up, like up, comment down. Happy Monday 6th round. We'll see you guys on Discord. See you on Twitter. Maybe by Monday. Barbecue holders will all be multimillionaires and they can come donate to the stream and support Happy Money.